Yes, good morning, good afternoon, or good evening, depending on where you are located. As you participate in this one-day practitioner seminar on building sustainable business models for inclusive agriculture insurance. So I'm Jean Bosco Yachu. I'm an inclusive growth enthusiast, and I will be your host for this first session that will be covering the context and trends around inclusive agriculture insurance. So as you already know, across most developing countries, agriculture insurance has been one of core focus areas for inclusive insurance. And this is largely, as we all know, because agriculture remains, or the agriculture sector remains, the main source of income and livelihood for majority of households living in rural areas across different parts of the world. The sector also employs a huge chunk of people, and we can testify to this, especially when we come to the African context. So the sector also hugely contributes to GDP, and last but not least, agriculture insurance unlocks more investment in the sector, and this has been seen across different geographies. So, despite all these compelling reasons really to have inclusive or to support the agriculture sector, we know that most of us have and have experienced it, that natural disasters like floods and droughts have been threatening the performance of this sector globally, really placing smallholder farmers at the edge of poverty trap. We have been experiencing climate change, and it's worsening from time to time. And really the situation or demand for effective risk mitigation options for smallholder farmers is paramount. So this seminar today is bringing together international and regional experts to exchange opinions, experiences, and perspectives on how to get agriculture insurance to viable scales. We know that different pilots have been happening across the globe with some good impact, but also, the discussions of recent have always been, how do you bring to scale agriculture insurance so that it can benefit more smallholder farmers in those geographies where different practitioners are. And this would improve really resilience of smallholder farmers through provision of client-centric and high-value agriculture insurance products. So this seminar is part of a series that has been happening, that is bringing regional leaders to learn, share knowledge, and network, and in the overall goal of contributing to the development of inclusive insurance markets in Africa. So at this juncture, allow me to recognize and appreciate the hosts and sponsors of this event, mainly for bringing us together today in this interesting and important conversation. I want to appreciate FinProbity, TAG Microinsurance Association, and Access to Finance Rwanda, the hosts of this conversation, and our esteemed sponsors, Microinsurance Network, FSD Zambia, of Financial Sector Deepening Zambia, and MunichRe Foundation. So thank you very much. I'll take you through a snapshot on the agenda that I presume everyone received. Session 1 will cover the context and trends in the inclusive agriculture insurance, which is to be characterized by opening remarks and keynote speakers from very experienced speakers here. Session 2 will be practitioners roundtable that will follow around 11. And then session 3 will be for facilitators roundtable, And at the end, we shall conclude later this evening. We shall conclude with a summary of the discussions and recommendations that have been made. So you will allow me to invite Mr. Shipango Muteto from the Technical Advisory Group on Microinsurance in Zambia to share his opening remarks. Welcome, sir.
Okay. Yeah. Good morning, everyone. The participants that are joining this webinar this morning, and of course the facilitators, the sponsors. We are grateful, of course, at the Technical Advisory Group on Microinsurance to partner with the Ever Weather Friends in terms of sponsorship of this particular webinar. Of course, the Microinsurance Network, FSD Zambia. We truly indebted to FSD Zambia for continuing to work with us, supporting us in the various activities that we do as a Technical Advisory Group on Microinsurance. And of course, MunichRe Foundation and of course, Access for Finance Rwanda, which obviously are the co-hosts together with the FinPro Solutions. I just wanted to mention briefly about the tag before we speak to why we are here this morning. Essentially, for those that maybe that are coming to know or join us for the first time in this particular seminar. Essentially, as a TAG, we've been in operation from 2009. Ours is an advocacy that looks at four pillars, of course, to try and strengthen the supply side of the financial insurance value chain. And of course, we do realize that the issues of consumer education and knowledge of, first of all, even the existence of insurance and how it works and the solutions it provides, obviously is still lacking among, for example, the populace in Zambia. And for that reason, one of our pillars, of course, the second pillar is, of course, to strengthen the demand side of the financial inclusion agenda. And of course, the issue of the regulatory environment is also key to that aspect. And of course, the TAG has been working, for example, with various stakeholders, culminating into an Insurance Act of 2021, Insurance Act number 38 in Zambia of 2021, which has for the first time recognized a license for microinsurance. In other words, companies now can set up exclusively a microinsurance company that will be able to provide services in that regard. And we are excited. Of course, there is a lot of work that needs to be done to then formulate regulations that to be able to enable that provision of a microinsurer or a microinsurance license in the country. We, of course, work with various stakeholders across the financial inclusion agenda, of course, development agencies such as FSD Zambia. I talked about working with the regulatory authority, the Pensions and Insurance Authority. Of course, we have on the Technical Advisory Group representation from the Bank of Zambia, and of course, the insurers that are supposed to provide support on the supply side. Reinsurers, of course, we know that venturing into, for example, agriculture insurance, there's need for further support in that regard. And then, of course, government ministries, of which I will allude to shortly. And then, of course, there is also a discussion to consider looking at aspects of micro pensions as part of the solutions to mitigate the various exposures that the underserved are exposed to. Our role, of course, we've been working, for example, over the couple of years, primarily, like I shared, with a special appreciation that I continue to give to FSD Zambia. We've, for example, participated in evaluating various proposals for pilot insurance products in the country. And of course, we continue to be available in that space as well. We currently chair the insurance working group, which is under the Ministry of Finance. When I say we, meaning the technical advisory group, we coordinate and chair the insurance working group under the Ministry of Finance, which is part of the financial inclusion strategy for the government, which is ending in next year in 2022. I'm sure we'll be able to revisit that strategy. One of them, of course, is to look at the issues of how solutions can be developed to mitigate all the exposures in the agricultural insurance space. And we believe with the new government that just took office a while ago, who are looking quite pro-agriculture, we begin to see development in agriculture, which will definitely require insurance solutions to mitigate whatever exposures are there. And like I mentioned, we work with Insure as well as a technical advisory group, coming from a reinsurance company myself, to try and find better mechanisms, of course, of providing support, particularly to the PC program. And of course, that's an ongoing project that keeps on being discussed. We've noted, of course, there's been a lack of enthusiasm among, for example, the general insurance companies to develop products that would offer solutions for those that are undertaking agriculture insurance as a livelihood, as a business, and therefore as a technical advisory group, our role is to contribute in that regard. And therefore for this particular webinar that has been organized, our expectations is that with the wealth of knowledge that the facilitators, the keynote speakers that have been assembled to deliver keynote speeches this morning, we believe that at the end of this webinar, solutions will be found not only to be applicable, for example, here in Zambia, but beyond, as the facilitators and the keynote speakers will be sharing experiences from across the globe that have gone a long way, for example, to the insurers to make a business case for them to be able to design insurance solutions that will meet the needs of those that are participating in the agricultural sector. And we know well over 60% of most of, particularly in the Eastern and Southern Africa, most of the populations are engaged in agriculture. And indeed, that's their livelihood. That's where they earn their living, and that's how they look after their families. That's where they are able to find resources to send their children to school. And therefore, agriculture is a very key, particularly sector that needs to be supported with appropriate risk mitigation solutions that will be able to help in that regard. So we are so expectant as a technical advisory group that the outcome of this webinar will go a long way to coming up with solutions that will deepen agricultural insurance. And therefore, I welcome everybody that has joined us to this session this morning, and I thank you.
Yes, thank you very much, Mr. Shipango, for the very good words on the tag and what you have so far achieved. So we want also to hear from Betty from Financial Sector Deepening Zambia. I know they have been working in this space for quite some time, and we want to hear exactly what has been happening. Thank you, Betty, and welcome.
So to the esteemed speakers and the organizers, to our valued participants who are here, and ladies and gentlemen, good morning. Before I get started on my brief conversation, I'd like to show you a couple of very quick videos from clients who receive weather index insurance. So let's have a quick look at what the clients are saying, and then I'll talk a little bit about how we develop this and why it's important in Zambia. Thank you.
nabadwira mulimi iyi amene yapita mvula sinaloke bwino manje nthawi amene tinashanga milisi yamera pamene inafika titifake fertilizer yapamwamba mvula ndiye pamene inayenderatu climate change yachinja so ichi chankala choyofya isema balimi kuti tizankhala wopulumuka bwanji munjira mwamene yachinjira apa. Vanatipasa 128 kwacha pa muntu. Vanali kutenga ma inputs, ma sprayer, mbeu, venangu vanali kutenga malata. Aya ma inputs yanachita benefit mwaona mu garden ino. Natenga ko mbeu ya repu jamine ili kuja. So ninashangako. Insurance ni abwino. Kuma uja wamena asungiza ankhalako napoyembekezera na thandizo.
Kalemfula yaleisa panchita limbi rate November filia kuti ambo okuloka yaloka fye bwino n'abantu bambo okubyala fye bwino firafine but pali lino nshita limbi inti yaisa mwabyala n'okubyala yaloka yaya chakwa n'okwefu fine mwasanga ati ne filimo fya stashani fyaonaika ichalengera chitupoke infula kumota yalokele bwino yalifye bwino nankuchakutila abanensu bali kwete kwa mafya ya moya filefya kwe bati chintu teti chibe 100% atinachiwama chakwilika chifile chakwatako tumoti mutu wako bati natushupa abantu bali satupera kwe mutoshimbi shakwe bati kutitwalima shatwafu wako ifilinga isha misalu ififi antapilire kuti twakonkanya pokulima nombali.
Thank you very much. So you now have a sense of what the farmers feel about weather index insurance. Zambia has a really low population density, and we cultivate only 30% of our arable land. So we have high agricultural potential. It is a critical means of livelihood for households. About 53% of the total population are formally employed in agriculture, but it actually supports 85% of the population. Most crops are produced by only one rain-fed season a year, and climate change is producing more frequent and expanded risks of crop damage or failure. Smallholder farmers largely produce for home consumption, and their productivity is relatively low. Poverty in rural areas in Zambia is about 80%, and well-being indicators are low. And in FinScope 2020, which was just completed, the most significant concern for financial health by households was the inability of poor households to address risk. So there's clearly a need for improved risk mitigation strategies for smallholder farmers and rural households. So weather index is a strong option given the circumstances of climate change. And market facilitators like FSD Zambia and others, like AFR, have a key role in stimulating innovation and participation between the public and private sectors. Support includes technical assistance for product development, system development, and client education. So pilots in agriculture insurance demonstrate value, but with private sector investments only, it takes a while to reach scale. So the process of new insurance adoption is a long one, as we found in Zambia. It started in 2013 with the introduction to insurers through Finmark Trust, then through a contractor for DFID, now FCDO, and then to FSD Zambia. So the work migrated across these three institutional types that continued on stability. So the focus was on smallholder farmers with one initial insurer who was the innovator. The subsidies were pretty important. They needed money for research, for client-oriented product development, and also how to market. And keeping the product simple is key, given the complexities of insurance. Droughts helped the early adapters of Weather Index see how valuable this risk management tool is. So the first year, 300 farmers. Then there was a drought and people got paid out. Then 3,000 farmers the next year, then another drought, and a lot more farmers in the following year. So when they saw that claims were actually paid was key in ensuring that there was interest and trust. Insure patience was also helpful because these first few years of losses due to the droughts was a real problem for them in terms of their income flows. So how did we involve the public sector in this process? Firstly, we kept the public and private sector both aware of what was happening with this first adapter and with the introduction and trials and pilots of weather index insurance, so they knew what was going on and how the product was being developed. We then went to the Ministry of Agriculture, who administers something in Zambia called the Farm Input Support Program, which has 1 million smallholder farmers. We shared our data on the index insurance. We showed how it could be done cheaply to cover the contribution made by the government. And 3 weeks later, they tendered it. So we were very surprised how excited they were. One firm won this, and then there was fast work by FSD Zambia and the Insure to enable that there was a workable premium. So the premium was 100 kwacha, which is about $6. For weather insurance, it covered up to $113, which was the value of the subsidy being provided by the government in the case of droughts or floods. And it was introduced as an add-on for the 300 kwacha farmer subsidy contribution. So there was actually no subsidy for the insurance itself. So farmers are paying the full value of the insurance cost in terms of the premium. There were some challenges with this program. The premiums collected by the government were paid extremely late to the insurers. So in other words, the premiums were paid late from the government, so the claims were paid late from the insurers for the first year or so. Digital finance payments came later, and it was finally fully digitized in Smart Zambia, which is the government digitization body. Financial education was also complicated. It took a long time. There were a number of iterations. Insurance is hard to understand. So people had to really take time and simplify the process and see that others got paid and see that they got paid. So now the government tenders for the insurance, and there are multiple firms that are involved that win parts of it. And there are no subsidies for this insurance at all. So it's, for me, very exciting to see 1 million farm families are covered by this. And so when there is a drought, when there is a flood, when their crops don't grow, they have an alternative and they can survive and thrive. So what are the key lessons that we learned? First, facilitate the private sector to develop a product that can be delivered and payments made easily, and that clients and the government can understand. The client centricity is crucial for trust and use of this product. Second, open the door to competition in the insurance market for such products when the links to clients is through the government, where it has large numbers of farmers who can be involved. Third, public sector must leave the core functions such as premium collection, claims administration, claims payout to the private sector or an efficient and trusted third party to ensure efficiency in the insurance value chain. Fourth, ensure regular end client training and explanations to ensure the acceptance and understanding. And finally, apply technology on some of the functions in the insurance value chain, especially mobile money, to improve efficiency and service delivery. Leverage the data analytics to improve the client value proposition. FSD Zambia is delighted to have initiated support to the inclusive agriculture insurance journey in Zambia since 2013. It's rewarding to see that many smallholder farmers have benefited from this agricultural insurance and that the market is responding with development of multi-peril insurance and other farmer needs. Thank you very much.
Yes, thank you very much, Betty, for those insights. Very interesting work you have done. Allow me to invite Dek, who is the president of the vice chairman, of MunichRe Foundation, based in Germany. He has a lot of experience. I've known him for almost the last 7 years in this space. So should be having wisdom to share with us today. Thank you. Welcome, Nick.
Thank you, Jean-Bosco. Dear Betty, dear Shipango, dear panelists, all protocols observed. A warm welcome also on behalf of the MunichRe Foundation. And again, it's a great pleasure for me to be with you here virtually, although, and I keep on saying this, I would have preferred to meet you in person because we all experience sort of an online fatigue. And yeah, we can work together online, but still the real exchange and the real networking, which creates solid networks over many years, rather happens when you meet in person. But we don't want to complain. Virtual allows us to do a lot. And as we heard many times already, that pandemic also created pressure on digitalization, which hopefully supports inclusive insurance, which is our topic here today. Now, despite all the challenges, it's a great pleasure to be here. And I would like to thank the Technical Advisory Group, FSD Zambia and AFR and all the partners involved for taking up this important topic of agriculture. And let me take the opportunity to congratulate these organizations for their impressive strategic work. And I really mean that. You're doing this to develop inclusive insurance markets. Shipango just mentioned how difficult it is to convince insurers to look into this market. There were financial difficulties to fund all this work, and it takes time. So please continue your work despite all the challenges. It is truly important and it can really change people's lives. Now, the pandemic still puts a lot of pressure on the global economy and the well-being of millions around the world. And we're all hoping that this is over soon. But looking at the availability of vaccinations, especially in emerging economies, I'm afraid it might still take a while. So meanwhile, we meet online, and while the pandemic keeps us busy, things like climate change still continue. And that makes the situation of the around 2.5 billion people that, according to the United Nations, depend on agricultural income globally, that makes their situation certainly not easy. Just a few weeks ago, here in Central Europe, we were hit by extreme floods caused by heavy rainfall. Now, this example might be slightly misplaced here because Germany is a rather rich and very well-developed country. But it affected over 40,000 people. Over 180 lives were lost. Over 800 people were injured and thousands have damaged or no home to live in. And it's a wine area, so wine is maybe not the most necessary product in the world, but people depend on that production. And that event destroyed all the infrastructure. So wineries are still there, but no one can go out to harvest. Why I'm mentioning this is that we just had the elections and that took place close to the elections, and it was really a wake-up call that climate change happens. That event was unprecedented. In that area, the river, the highest level of the river ever measured was 3.8 meters. This time it was about 9 to 10 meters. It's uncertain because simply all the measurements were gone. So that never happened before. It's certainly caused by climate change. And in that case, it impacted agricultural production. Now we've seen more of similar severe events around the world. Heat waves, droughts, floods, storms, and cyclones are becoming more severe and more frequent. Since the 1980s, the number of such disastrous events had more than doubled worldwide, from around 300 disasters per year to more than 600, according to data from our founder, MunichRe. Climate change is the main driver here, but also factors such as urbanization, demographic changes, and population growth increase the number of people affected by natural hazards. The natural hazards that we have seen this year, and I mentioned that, were truly a wake-up call that being prepared, understanding and reducing the risk, getting the right warnings and knowing what to do is key. And certainly climate change cannot be ignored and we need to be prepared. And risk management that includes insurance is an important component of being prepared. But if in rather rich countries, extreme weather events can have such a devastating impact, what happens to billions of those who are severely affected by extreme events but do not have the similar resources to protect themselves effectively? Understanding risk and what to do in case of disaster strikes is a key element of disaster management. But we also need tools that help to recover after disaster, such as insurance, which unfortunately is still hardly available in many sub-Saharan countries. Solutions including insurance must be found here that are efficient and cost-effective and ideally can rapidly be implemented. The MunichRe Foundation organizes the International Conference on Inclusive Insurance, as some of you may already know, and we had organized that in Zambia some years ago. And since many years, we use national events to discuss more focused on a region and what needs to be done to reduce barriers for insurance that reaches those who are currently being left behind. And there are already very promising examples in the region, such as the Zambian FSD program that has already been mentioned, which could be a case study to learn from what does work and what mistakes could be avoided in the future. So we see the potential for growth, but also for the potential for failure if we do not develop the right products that are easy to understand and that people trust and people can afford. Cooperation and partnerships are key, and this is why this conference or this seminar brings together practitioners that share experience and learn from each other. Let me repeat that understanding customer needs to design suitable products, create enabling and positive environments, and pursue public-private partnerships were the key takeaways summarized by Chipanga Muteto after the 2018 International Conference on Inclusive Insurance. We need a long-term and customer-centric approach that involves all stakeholders. This is the case for all lines of business, including agriculture. And we must keep in mind that climate change will have a huge impact on developing countries that are highly dependent on agricultural income. And this will increase the pressure to find the appropriate risk management solutions to cope with the negative impact of changing weather patterns. I firmly believe that insurance is an important component of sustainable economic development and that it can help to improve the living conditions of billions of people globally. But we need to speed up our efforts. We need to understand opportunities, but also the barriers and how to overcome those, as well as implement national financial inclusion strategies and develop solutions to manage climate risks on all levels. So thank you very much for giving me the time to say some welcome words here. Thank you again to the organizing team, and I wish all of us an interesting seminar.
Yes, thank you very much, Dirk. Those insights. I think we have heard of so many points that and what is happening across the globe. And my key takeaways from these opening remarks really are, I liked the fact that in Zambia there is a coordinated approach, really that brings different stakeholders on the table, be the public, the private sector, to discuss, and even the development sector actually, to discuss and agree on a course of actions that would promote inclusive insurance. So thank you very much. I think that's something that can be emulated in other geographies. I liked the approach around really client centricity or farmer, take care of the farmer's needs as you design products. They are very important, and I would extend to really when we talk about PPP, but we would say the public, private, and people partnership, really making sure that the voice of the farmer is at the table as we design products or we put together any schemes that would help them. Betty mentioned about timely payments of payouts to farmers, which is very important. Indeed, we have seen it where payouts come even 2 weeks late, and then farmers miss the time to plant their seeds. And then there's no actually point to have insurance. So that's something which is very critical. And that can be addressed through the leverage of technology and bring more efficiency in all the processes when we are underwriting different policies. Climate change, as Dex said, is real. It's there. It's across the globe, and we can't just ignore that. So it's very important that we do something around it and see which kind of mitigants are there. And he mentioned about really trust. I think the demand side in different markets, when you ask what kind of insurance they would wish to have and who are and how they perceive the providers, there's always an issue around trust of the insurers, and insurers have been working hard really to increase that trust from the demand side and provide affordable products to them. So thank you very much for these opening remarks, very insightful, and I think they are really putting the stage on for different sessions that will be followed, and most importantly, really laying the ground for Janek and Dan who are following to give their own presentation. So the next presenter is who is a keynote speaker really with some slides, is Janek, who is coming from he's an advisor at the Secretariat of the Insure Resilience Global Partnership for Climate and Disaster Risk Finance and Insurance. He has very good exposure to different markets and what has been happening. So I'll give him the floor in a few minutes just to share what he has prepared for us today. Thank you. Welcome, Janet.
Thank you, John Bosco, and I hope everyone can hear and see me well. Let me start by thanking and congratulating the organizers for bringing together this round today and for kickstarting the important conversation that we're having today. And yes, in the next couple of minutes, I hope I can add my 2 cents to that. As just said by John Bosco, I'm an advisor at the Insure Resilience Global Partnership Secretariat, and hope to walk you through some of the work we're doing and some of the concepts that we see as important for inclusive and participatory disaster risk finance and risk transfer. On the next slide, I put down a couple of the points I'd like to raise today, starting with why there is a need for a coordinated approach at different levels to climate and disaster risk finance and insurance. I'll then introduce the Insure Resilience Global Partnership itself, and we'll go through some examples and case studies of work that's happening under the partnership in different sectors and with the focus on particular regions of interest, perhaps. So the next slide provides some background for why there is a need for a coordinated approach on disaster risk finance and insurance. And that is true at various levels globally. The risk landscape is changing and becoming more complex. And it was mentioned earlier today, and of course we're all aware of the results of the recent IPCC 6th assessment report. Climate risk is increasing, and on top of that, it is aggravated through additional shocks, creating compound risks, such as most recently the COVID-19 pandemic. Leaving people, businesses, and governments with little budget for far more vulnerable. The global protection gap is really not up to that challenge to an extent. On the contrary, it is growing. So the protection gap, economic losses compared to losses from disasters that are covered by insurance or other risk finance arrangements, stood at $1.2 trillion in 2018. and it is growing. It more than doubled between 2000 and the year 2018. And what's shocking about that is that emerging economies have by far the biggest gap in relative terms. So less than 5% of disaster losses are covered by insurance in low-income countries, whereas 50% of disaster losses are covered by insurance in high-income countries. That really illustrates some of the differences that were and vulnerabilities that were pointed out earlier today already, and this also illustrates that the vulnerability to fall into severe poverty from when disasters strike remains highest in those cases where early action and adequate access to risk finance tools are missing, meaning that liquidity after disaster strikes is not easy to bring about. And so really what's needed in this sense of what we're promoting is a systemic shift towards more pre-arranged, predictable risk finance for countries, businesses and individuals, as opposed to ad hoc assistance after disaster strikes. So this is obviously a huge challenge and requires combined efforts. And more on that is on the next slide. I believe I've just talked a little bit to that risk environment. Climate and disaster risk shocks are increasing, and even under 1.5 degree scenarios, they will intensify. And what we observe globally, really, and this is true for many countries, is that the institutional environment is not up to that challenge. The institutional environment that has to deal with these risks. So what we see is fragmentation of the institutions and actors and among instruments and approaches. There's often a lack of information on risks, on risk management and on appropriate disaster risk finance products. And there's a lack of access to technical and financial resources. This really illustrates that there's an incomplete picture of country and community-specific resilience needs, and this is a little bit of the background of what the Insure Resilience Global Partnership is trying to address by providing a multi-stakeholder platform, setting a common agenda, and enabling coordinated and needs-responsive solutions and implementation of disaster risk finance and insurance projects. The next slide illustrates in some more conceptual detail what we mean by an integrated approach to disaster risk management and finance, and this will be familiar to many of you in various variants, a diagram like this. So as mentioned before, we're promoting a pre-arranged and predictable disaster risk finance upscale at all levels, and an integrated approach to this, moving from the left to the right in this diagram, would mean that in a first step, risks are identified, prevented, and reduced to the maximum extent as far as this is cost effective. So that's the left-hand side, reducing disaster impacts, and only residual risks that cannot be reduced further cost effectively are retained or transferred. And this according to a neat risk layering approach employing various disaster risk finance tools. Along this continuum that is just up on this slide, we highlighted a couple of agricultural interventions. So the concept of integrating risk reduction with risk transfer holds true for interventions in various sectors, but particular examples from the agricultural space would comprise adaptive farming practices as one means to reduce risks, coupled with financial protection and risk transfers such as agricultural insurance. And just the last point on this slide, on the most right-hand side, we see the pillar on resilient recovery, which is really around building back better, one of the big challenges in the aftermath of COVID-19 as well. Moving on to the next slide, I wanted to show an overview of these people-centered climate and disaster risk finance and insurance tools. So I've mentioned risk-layered approaches to disaster risk finance before, as well as our work on the different levels, households and individuals, as well as small businesses at a meso level, at a micro level, risk aggregators at a meso level, and risk transfer for sovereigns and sub-sovereigns at a macro level. And this graphic, adapted from the Center for Disaster Protection, brings these quite nicely together. The key message here is that beyond individual insurance, there's a range of disaster risk finance tools for risk retention and risk transfer at the different levels. So for example, on the top left, we see household savings. That is certainly a risk retention instrument at the micro level, whereas public asset insurance, national disaster risk funds, or sovereign risk pools at the right-hand side, example for risk transfer instruments at the macro level. So the discussion so far, I hope, sets us up a little bit for going into what we're doing as the Insure Resilience Global Partnership on the next slide. I have delved into some of the concepts that we see as important for integrated climate and disaster risk finance and management. And to promote these and support stakeholders with the uptake and use of climate and disaster risk finance and insurance, the Insure Resilience Global Partnership was formed in 2017 to enable timely and reliable post-disaster response and facilitate the systemic shift to what we call ex-ante risk finance. This slide contains information on what Insure Resilience is. It's a partnership that brings together over 100 stakeholders from different stakeholder groups and promotes solutions that benefit the most poor and vulnerable people with 4 priority areas of action. I won't go into all of these in detail. Instead, there will be a short video played on the Insure Resilience Global Partnership just now.
In the face of increasing climate and disaster shocks, the Insure Resilience Global Partnership brings together V20 and G20 countries, the private sector, multilateral organizations, civil society, academia, and other networks and initiatives under one common vision: strengthening the resilience of poor and vulnerable people and providing countries with financial tools to adapt to climate change. The partnership's goal is to provide actors with guidance, capacity building, and support with implementation, while fostering collaboration to drive the implementation of climate and disaster risk finance and insurance solutions. Through the Program Alliance, the partnership mobilizes the world's leading programs for disaster risk finance and insurance to develop financial solutions for governments and individuals. Thanks to the Program Alliance, a microinsurance policy that the Koroma family took out in 2018 prevented them from falling into poverty. Through an intermediary, a seed cooperative receiving financial and technical support under the Insure Resilience Global Partnership, the family rapidly received insurance payouts and seeds for the next planting season. The children were able to continue school and the parents' income situation stabilized. Mrs. Akbar's government received insurance payouts a few days after the hurricane through an insurance policy between the Ministry of Finance and a regional risk pool in the Pacific region. Mrs. Akbar used the payouts to quickly launch the reconstruction of the bridge and to provide immediate disaster response to the most affected communities, preventing setbacks in the country's development. Pre-arranged finance, including insurance, effectively helps vulnerable populations become better prepared, recover faster, and absorb losses from extreme weather and disasters. That is why the Insure Resilience Global Partnership aims to scale up climate and disaster risk finance and insurance solutions, contributing to broader climate adaptation and resilience efforts. In the face of
thanks for showing that video, and I hope it does provide a little bit of an insight. This slide just really shows briefly a membership of the Insure Resilience Global Partnership from the different stakeholder groups, V20 countries as well as G20 countries, civil society institutions, private sector, multilaterals, academic institutions, implementing partners and initiatives and networks. We heard about the value of partnership in this space previously, so this would be a good illustration of that. On the next slide, I've just briefly highlighted a couple of goals of the Insure Resilience Global Partnership contained in its strategic vision 2025. Members, as just shown, aim to collectively reach 500 million vulnerable people and improve their protection through climate and disaster risk finance and insurance. 150 million out of those would be covered through inclusive microinsurance. 10% of annual climate and disaster losses should be covered by the year 2025 by CDRFI, as we call it, as opposed to a figure smaller than 5%, as just mentioned now, the protection gap metric. And in addition to that, working with governments at the regulatory level on putting in place comprehensive disaster risk finance strategies, namely in 80 countries. On the next slide, just briefly illustrating some progress against these targets. So there's still some way to go, but collectively, partners under the partnership are working towards meeting some of these targets. So in the year 2020, 137 million people were covered through CDRFI solutions in place, 33 million of which come from microinsurance. 32 countries did already have comprehensive disaster risk finance strategies, 29 countries microinsurance solutions in place, and a slightly larger share of 44 countries with sub-sovereign risk finance and insurance solutions in place. Against that backdrop, on the next slide, I wanted to show the global reach of climate and disaster risk finance and insurance. So this gives a little bit of an idea of countries where solutions in this space are operating, and I believe this nicely illustrates that this is really a global topic of importance recognized by stakeholders in all continents. And with that in mind, I wanted to give an example and zoom in on a particular region of interest on the next slide that could be interesting for today's audience. So in sub-Saharan Africa alone, in 2020, 72 projects were up and running on climate and disaster risk finance and insurance by members of the Insure Resilience Global Partnership. So the figures in different countries here are the number of country projects, and the graph on the left-hand side illustrates that many of those were focused on droughts. So that's the right-handmost bar, followed by floods. So this, I believe, illustrates well that solutions do respond to those perils that make up the risk profile in these countries. Other perils of importance were earthquakes, windstorms, and tsunamis to a limited extent. So in the following, there will be some examples from agricultural context, specifically from the different levels. On the next slide, I wanted to start with the macro level and sovereign risk pools. Specifically, one main implementing vehicle under the Insure Resilience Global Partnership that will be familiar to many of you is the African Risk Capacity, a groundbreaking initiative designed to improve responses to drought-induced food crisis. Globally, multiple regional sovereign disaster risk pools exist, such as SEACRIF in the Caribbean or PCRIC in the Pacific Ocean. And one of these, and in a way, a unique development insurer is the African Risk Capacity. What makes it unique as a development insurer is the contingency planning and linked financing and the build-up of member states' capacities to manage risks holistically. So ARC, as a sovereign risk pool, provides predictable and rapid financing in the event of drought and tropical cyclone based on parametric triggers. These products are modeled based on the Africa Risk View modeling platform. ARC currently has 35 member countries, and its pool size varies for each agricultural season, meaning only those countries that take out a policy for a particular season are covered. And the larger the pool size, the larger the diversification effects and the savings that countries make from taking out insurance from a pool as opposed to taking out insurance individually. ARC is currently working on developing further products for river floods and outbreaks and epidemics. And the figure on the right-hand side here is one that is really that has become widespread in the literature on disaster risk financing, a prime example of the cost effectiveness of disaster risk finance. The next slide, and just briefly on this perhaps, is on a meso-level solution under the Insure Resilience Global Partnership. The World Bank managed GIIF facility helps smallholder farmers, micro-entrepreneurs and microfinance institutions to access risk finance and catastrophe risk transfer. And it does so by working both with the private sector as well as with the public sector. On the private sector side, the GIIF funds implementing partners, intermediaries, and brokers who develop index insurance products. And in Eastern and Southern Africa, this is currently happening in 4 countries: Zambia, Mozambique, Kenya, and Rwanda. On the public sector side, GIIF works with governments on an enabling legal and regulatory environment. And as many of you might know, this is currently underway in Uganda and Kenya in the region. Lastly, I wanted to give a brief example of the micro level on the next slide. So in a way, closing the circle and coming back to integrated disaster risk management and finance that I started out with. A prime example for the combination of risk reduction and risk transfer is the World Food Programme's R4 Rural Resilience Initiative. It's been a long-standing program around since 2011, and is really bringing together risk reduction practices such as improved agricultural practices and resource management techniques with insurance, that is risk transfer, as well as with savings and prudent risk taking. There's some facts on the right-hand side here in terms of coverage and payouts since the start of the program. But as a very last aspect, I wanted to bring your attention to the following slide. So recognizing the importance of the agricultural sector in particular to the climate and disaster risk finance space and to societal vulnerability more generally. This is illustrated by the figure here. 26% of disaster-related damages and losses stem from the agricultural sector globally. This figure, more than a quarter, is up from 23% for the previous decade, and in a way illustrating a trend. And so recognizing this, as the Insure Resilience Sector Global Partnership, we decided to, in a way, focus on this issue, and in recognition of this, have just recently established a sectoral community on integrated resilience approaches in agriculture. that is focused on a structured technical exchange on the sector and on feeding the pipeline of partnership projects. I know I believe some participants today are members of that sectoral community as well, but for others interested, do reach out. And that is really the concluding slide of this session. On the next slide, these are several ways to reach us, and I believe they will be shared afterwards. With that, I think on the next slide, I'd just like to thank everyone and look forward to the remainder of the discussion. Back to the moderation.
Yes, thank you very much, Janek. Very good points made on indeed the need for a global partnership to address climate change issues. So we have some quick questions from the audience. Just I think one from Nelson, Zambia. He asked, does your organization have national chapters in different countries so as to get access and support for those in need of your expertise? Probably you can just respond and then.
Sure, yeah, I'll have a go at that. That's an excellent question. So the partnership is not organized strictly in the sense of having sort of different regional units. There's multiple organs of global scope. There is a steering committee that we call the High-Level Consultative Group. There's a program alliance and there's a secretariat, but again, all global in nature. There aren't any national chapters, but there are programs contributing to the partnership, running projects in different countries, as just illustrated. So those would be a first sort of entry point to engage with at a national level. But for entry points with the larger global debates, it would be the secretariat and the contact details shared at the end of the presentation to contact. Thank you.
Yes, thank you very much. Indeed, we shall share all the materials, the presentations that are being made here. So for more insights, if you want to refer to them. So my last question here to you, Janek. I mean, you've given a global perspective earlier on what is happening, which is already great. But I wanted to understand, I mean, from your perspective, how are the developing countries doing in terms of really taking protection against these extreme weather conditions? Do you think we are at a level that is probably satisfactory, or do you think there's a lot that needs to be done for really people to be protected?
Thanks for the question. That's a great one as well. And yeah, I mean, in my view, the great challenges remain in terms of the figures alone, right? As illustrated, as illustrated, the protection gaps remain. The protection gaps in developing countries, in particular, remains shocking. But that being said, what we experience in this V20 G20 partnership is that a number of developing countries are certainly really leaders in this space and pursuing very ambitious policies, and it is about bringing the fruits of that to the people in need. One particular challenge with that we see is the affordability question around the affordability of premiums at all levels for individual microinsurance as well as for sovereign insurance, and that is why one of the focus topics that the Insure Resilience Global Partnership is working on this year is the development of a set of principles on what constitutes smart, premium, and capital support. And we're hoping to be able to present those by the time of COP26 in November this year. So do stay tuned.
Yes, thank you very much for those responses. Well, we, just to be right on time, I want to invite Ayandev Saha to share also his key insights. He is a strategic advisor at the Ministry of Finance and Economic Planning in Rwanda. And why did we select Ayandev to share insights in this conversation? It's because he has played a key role in the design and the implementation of national agriculture insurance schemes back in India and in Rwanda. So he has a lot to share today. So Ayandev, welcome.
So good morning, good afternoon, good evening, one and all. Thank you for inviting me. And thank you for inviting me to this webinar and giving me this opportunity to share my experience. Just to highlight one of the areas which I would like to focus in the presentation is the role of insurance in the development sector, and what should be the role of the government and why government needs to play a very important role. And especially when we think of government playing an important role, it equally comes by saying that should we think beyond social protection, because many times insurance has always been seen as a social protection. But today my presentation will more focus, or my talk will more focus on how insurance can lead to commercialization of smallholder farming. To start with, these are some of the biggest risks that we see or the government's experience. It starts with conflict, violence, and war, economic uncertainty and financial crisis, the climate change. Climate change will have far-reaching effects on crop, livestock, and fisheries, production, the prevalence of the crop pest, food production system, and food security. With climate change, and you already heard from the panelists how important this climate change is causing in terms of agricultural production loss. But on the other hand, we also need to understand that the world's population will be at 9.7 billion people by 2050. And when we look at poverty, it is believed that poverty is to be one of the leading cause of overpopulation. And with the increase of population, the croplands and water supply are strained, which immensely impact the food production. The climate change and poverty and the less of production will also see a huge amount of migration. In one of the recent reports, it says that sub-Saharan Africa could see as many as 86 million internal climate migrants, and this trend is expected to increase over time. Now, looking at climate change and the poverty and inequality, if we put in the context of food and agriculture, the three important challenges are food stability and food availability, food access and food utilization, and systemic challenges. Now, some of these risks can actually be addressed by building resilience at the individual level, resilience at the community and at the society level, and resilience across the sector. Now, this resilience, what we mean is by addressing the climate change and intensification of natural hazards, build resilience, as I mentioned, to protracted crises, disasters, and conflicts, and also make food system efficient, inclusive, and resilient to address some of these big challenges. Now, when it comes to food production, one of the common thing that we try to understand at a policy level, whether to address the smallholder farmers and the commercial farmers, or how can government secure agricultural productivity and production over the long run. Now, if we look at some of the stats, 5 of every 6 farms in the world consist of less than 2 hectares and produce more than 1/3 of the world's food production. Global population, which is expected and projected to reach at 9.7 billion in 2050, most of the increase in the population is expected to be in the developing countries. Countries with larger and growing rural populations will depend even more on agriculture, not only on food, but also from an employment perspective. According to the widely cited estimates, the world food production must double by 2050 to keep up with the population growth. Now, this smallholder agriculture, especially if they are very well integrated into a diversified rural economy and agri-food value chains, can contribute even more to inclusive growth and employment generation, which will be one of the big challenges along with the food security is the employment with the growing population. The question comes is then, what are the challenges when it comes to address the smallholder farmers? The one is the limited farm size. Now, this limited farm size creates a challenge both at the financial service providers level, be it insurance, be it finance, is in terms of transaction cost in serving the clients with a small farm size. The second is access to financial services. They are mostly excluded from the productivity, enhancing the financial services due to agriculture-specific risk and production risk. It's worth mentioning there are a lot of other risks in terms of non-availability of collaterals, in terms of transaction cost, in terms of reaching these people at far rural areas. So those all creates a challenge to access to financial services. The third is the climate change. The smallholder farmers are far more vulnerable to more frequent extreme weather events due to lack of access to formal safety nets, and also most of the agriculture is rain-fed. So it's not that the smallholder farmers are having access to irrigation facilities. So that also makes them more vulnerable. The next important challenge that the smallholder farmer always faces is the price volatility. And it is in terms of input price, it is even in terms of market price. Now, this price volatility will make it difficult to finance some of the crucial inputs. Uncertainty may also result in suboptimal investment and also in suboptimal outcome. Access to modern markets, lack of information leads smallholder farmers to face higher prices for opportunities, middlemen and traders. So most of the smallholder farmers significantly rely on the middlemen and they don't have access to the markets. So the development and the commercialization of agriculture is the way. And this can happen through mechanization and modernization. And to happen, the mechanization and modernization, there is a need for agriculture finance that can support larger investment, greater inclusion of youth and women. Again, as we all know that there's a significant percentage of the agriculture farm labor force or the workforce is women. And also in terms of investment on technology. Now, an important challenge that needs to be addressed along with this investment is the systemic risk or the covariant risk. Through insurance and other risk coping or risk management mechanisms, lowering the operating cost in dealing with the smallholder farmers. The question then comes is how we want to look about it. So if this agriculture finance and agriculture insurance happens together, let us look at the current agriculture sector. There are close to around 500 million smallholder farmers worldwide, which is predominantly the unprofessional, unorganized sector. And this 500 million smallholder farms is actually supporting around close to 2.5 billion people. With effective agriculture finance, these people can increase their agricultural productivity and the insurance can reduce their vulnerability. With greater and higher quality of yields, they can start producing a surplus to sell in their local markets, benefiting not only others in their communities, but also their own financial security. And if you see the transition that is happening from the current agriculture sector to the future sector, is the middle portion, which is comprising of smallholder farmers. They are now getting more organized. They are able to generate higher yield, and they are also close to optimal production. And this is happening through a transformation of the smallholder farmers. They are having access to bank account, access to finance through insurance. Along with insurance, they are able to move from a food crop to cash crop, which will give them higher return in terms of investment, mechanization, and their business are also getting registered. The question then comes is why the government needs to play and what is the role of insurance from the government's policy perspective. So let us look at some of the policy changes that most of the governments are facing today. One is the losses to the local, national, and global food security. The second is the poor access to credit. Most of the farmers, as I said, the smallholder farmers doesn't have access to finance. And because of the lack of finance, it's inhibiting in productivity enhancing investments in terms of high quality sales, technology, and so forth. The last and not the least, there is also a policy challenge, which is in terms of addressing any form of corruption and fiscal leakage that happens in terms of government transfer post-disaster. Now, some of these challenges can be actually solved through insurance. The question comes whether it should be a public-driven, government-driven program or whether it should be a private-driven program. In many of the countries, you will see some of the challenges in terms of market failure, which actually makes it important that the government needs to play an important role. The first comes is the data or the information. The lack of information on asymmetry information sometimes doesn't allow to design agriculture insurance scheme, and even getting the data sometimes is expensive. So in that context, the government needs to come in and invest in making available agriculture and weather related data. The second important risk, by the nature of the agriculture risk, is the covariate risk exposure or systemic risk, which can generate major losses to the local insurers. Here again, the government needs to come through in facilitating the risk finance and access to the reinsurance market. The last but not the least, the awareness, the education on the agriculture insurance, the importance of having risk scoping strategy, risk sharing in terms of insurance needs to be done, because many of the farmers, especially the smallholder farmer, doesn't have trust on the financial instruments. So again, here the government needs to play an important role. Now, when we think of government playing an important role in agriculture insurance and developing and implementing an agriculture insurance scheme, are we speaking something new? The answer is no, because if you see, when it comes to the sector, the government is already investing a lot on physical resilience and social resilience. In terms of, in most of the countries, you will see that the government is taking care of good quality of seeds, providing access to vaccine, providing access to fertilizers, giving input subsidy. On the other hand, to build social resilience, government is also having programs like strengthening the cooperatives, putting the farmers into cooperatives so that the cooperatives can access to inputs. So the third thing, which is equally important, along with physical resilience and social resilience, is to build financial resilience. And this should be one of the mandate of some ministry. It can be Ministry of Finance, Ministry of Agriculture, to see how a pre-arranged predictable funding can happen for post-disaster activities to protect the fiscal balances, subnational governments, households, and businesses. Then the question comes is, if there is important that in terms of solving the market failures, in terms of addressing some of the policy changes, the government needs to play an important role, what role the government should play? As I mentioned, one important starting point should be the data. In terms of collecting data, auditing, providing a data which is more of consistent, credible, through various sources. So that is very important, be it agriculture related data, farm level data, farmer related data, weather related data. The second is outreach. Government needs to provide subsidy, and you heard one of my fellow speakers say that the affordability is a big challenge, especially when it comes to smallholder farmers. So again, here the subsidy is going to play a very important role. Let me give the context of the Rwandan agriculture as a sector. It contributes 1/3 of the GDP. It contributes 70% of the workforce is engaged in the agriculture as a sector. And most of the farmers, the majority of the farmers still rely on rain-fed cultivation. And when it comes to the land holding size, it is 0.5 to 0.7 hectares of land. So when the National Agriculture Insurance Scheme was designed, the first thing was done was feasibility study to ensure that the agriculture insurance scheme responds to the need of the farmer, and the product is designed in such a way that it actually addresses some of the challenges that has been seen in the past schemes, and those are addressed in the new scheme. Access to Finance Rwanda played an important role in consultation with the Ministry of Agriculture, appointed a firm to design and implement the agriculture. And one of the important thing was to see on building natural aggregators. So farmer cooperatives, SACCOs, banks, and MFIs played an important role in terms of mobilization and of the farmers, bringing the farmers into the scheme. This scheme also comprises of both crop insurance as well as livestock insurance. And again, when it comes to the value chain, this value chain actually addresses both food crops as well as commercial crops and livestock. So in case of livestock, It is a crossbreed and exotic in terms of higher productivity. And also in case of crop, it is beyond food crops like maize and rice, but it also covers crops like French beans, Irish potatoes, which is more of commercial oriented. The last but not the least, this agriculture insurance scheme also using technology both at enrollment and claim stage. It's worth mentioning, this insurance scheme has been designed and built on RFID microchip, which helps in identification of the livestock. It drives efficiency, minimizes cost, and also enables fast and error-free recording of policy details and the asset details in terms of the livestock. So what are the important things that needs to be done in building a national agriculture insurance program? The first, it starts with product quality. The second is product and contract design, bundling insurance with various other services. The product needs to have see the income and affordability. So there is a need for government subsidy, especially when we are thinking of smallholder farmers. The role of the government in terms of policy setting, regulations, and market stabilization. Education, knowledge, and information is very important, but it should address the cultural perception. Last but not the least, even before we bring insurance, these farmers were having their own risk scoping strategies. It is very important the National Agriculture Insurance Scheme should strengthen the existing risk scoping strategies. The last point that I would like to mention is you always discuss about the sustainability of agriculture insurance scheme and whether a premium subsidy is sustainable over long run and how an agriculture insurance scheme can be sustainable. One of the ways of looking or making it happen is by de-risking the entire sector. And when we say the de-risking of the sector, it can happen if we create something like an agriculture risk sharing facility, which has multiple components. One is indirect levers, where we are trying to enhance the agricultural value chain and infrastructure development in terms of agricultural mechanization, irrigation, input, market access. This will actually help also in the commercialization of the agriculture sector. The second is the direct levers, which are risk sharing in terms of well-developed ICT.
Sincere apologies for that. So I see questions in the chat box. Well, I hear they haven't, that's Mambo, who is talking about the role of women in promoting sustainable agriculture, inclusive agriculture insurance services. She wanted to hear thoughts of the presenters here. I don't know, Janek, do you have something to say about the role of women in promoting sustainable agro insurance services? As you wait for Ayanda.
Thank you for the question. Yeah, I mean, the role of women is one of our key focus areas as well. And certainly a lot of the evidence points to the effectiveness and need for sure to involve women early on in the design of such schemes and harness the potential that effective targeting of climate and disaster risk finance and insurance to those in need, including through the lowering of access barriers that are gender specific can play. And one of the concrete work streams on this that we're pursuing is the launch of a Center of Excellence on gender smart solutions for climate and disaster risk finance and insurance. So this to be sort of a one-stop shop for all resources and conversation around meaningfully involving women and targeting CDRFI schemes to their needs. This Center of Excellence is just to be launched at COP26 as well, but sort of the online version of it is up and running, and I would invite everyone to have a look at that website, and we'll post the link in the chat just now.
Yeah, that's good. Thank you very much, Janek. And Dev, you are back.
Yeah, and I'm very sorry. I don't know what's happening today with the internet. It generally happens. I think it actually happened today. I'm so sorry.
You can go on. You can go on, please.
Yeah. So in fact, I was just sharing this risk sharing facility. Let me just take 2 minutes because I think we are running out of time as well. So I was telling that this risk sharing facility is very important, in terms of both indirect levers as well as the direct levers. In terms of indirect levers, it is how to develop the value chain, but on direct levers, it is risk sharing, improving the technical support services, facilitating agriculture finance by developing new financial products, appropriate incentives and ratings, use of mix of incentives and penalties to shape the financial system behavior. And agriculture insurance should be seen as one of those components, to hedge against the variability of cash flow, improving the farmer's ability to pay, bundle insurance with credit, smart subsidies, and so forth. Just before I conclude, let me leave a thought with all of you. In short span of time, I believe the digital infrastructure has transferred the way we carry digital transaction in a more secure and a seamless manner today. On a similar lines, creation of AgriTech, digital farmer profile, de-risking the entire sector through agricultural technology solutions would bring all stakeholders in the entire agricultural value chain, right from a farmer to an agro dealer or input provider to a marketplace, along with the financial service provider on a common platform can be a big game changer. I also strongly believe that de-risking the sector, technology with credit and insurance bundled together can propel the agricultural growth and agriculture to a greater heights. Finally, thank you so much, and sorry for all the inconvenience. It's the first time I'm experiencing this sort of connectivity issue. I'm very sorry, sincerely apologize.
Yes, thank you very much, Andep. And we understand, really. It's connectivity is always unpredictable. It's good that you are back and you can share and finish your slides. We still have some few minutes, and there are questions in the Q&A chat box. I hope you have visibility on them, Andep.
Yeah.
Would you go through them and probably talk to them?
So I think, Yechu, if you can just repeat, because during that internet connectivity, I lost those questions, so it doesn't show me right now. Yeah.
Okay. So,
Sorry.
So there's one from Gonfa from Ethiopia. So he says the problem with real and viable data is what we are facing here. That's in Ethiopia. The current price for food grains has been raised with 300 to 400% as compared to our data that we are preferring while selling for AIY, that's area yield insurance, index insurance here in our country. Inflation is also matters, so we can solve such problems. How do they solve such kind of problems?
Yeah, thanks, Yechu, and thanks for asking this question. I think that is exactly what I was saying. Agriculture insurance all alone cannot solve the problem. Agriculture insurance is just the risk sharing or risk transfer instrument and mechanism. When we think of the overall agriculture sector commercialization or the growth of the agriculture sector, addressing issues like price, addressing issues like availability of inputs, it can be only done when we try to de-risk the entire sector and when we try to put all the building blocks. One of that block is insurance. So that was precisely I was saying. So we can't think of giving insurance when the farmer doesn't have the money to buy the inputs. So access to finance becomes very important. Access to credit becomes very important. Now the credit or access to finance is not happening because of the inherent risk or the agriculture risk that is already there, right? In terms of production risk, in terms of market risk. Now some of these risks can actually be mitigated through insurance. So insurance should be seen as a catalyst, in some form to make this access to finance happen. Now, once this access to finance happens, this money should be invested for increasing agricultural productivity. And that is where I said the mechanization and the technology needs to come together in terms of seeing that I am actually investing not only buying seeds, but I am investing on high quality yield variety of seeds. I am not only investing on pesticides and others, but these are also available to the farmers at the right place at the right time. So I think that is where I say that, one is the entire value chain development on the agriculture space, and also the financial sector and development. These two needs to come together to de-risk the entire sector. And in terms of the data availability, as I said, that is also one of the reasons why most of the cases why government needs to play a very important role, is to ensure that they address some of the challenges like asymmetric in information. And again, the government needs to see how they can make access data from various sources. If you just ask me, if I just give an example of the Rwandan scenario, it was not only the Ministry of Agriculture, it is not only the National Institute of Statistical Research, but even a field level agronomist played a very important role in providing the data of their own location or own region. So it has to be overall, yeah.
Great, thank you very much, Andev. I remain with two questions. So this is Enoch. He says most subsidies are targeted towards premium subsidies, and there is a heavy costs on operations. Subsidy models should consider provision of subsidy or consider subsidizing operations. What are your thoughts on this? Also, basis risk is creating reputational issues in the market as well. Do you think government should support in setting up basis risk fund? How is government of Rwanda as part of the agricultural insurance scheme handling basis risk issues?
Sure. So the first point on the cost of operation and operational cost, of the insurance company, and that's again where I believe two things can happen. One is the role of technology. And technology needs to play a very important role in reducing the cost. The second, also looking at the cost, I think it's very important to find the right aggregators, and again where government can play an important role in terms of identifying those value chain which are far more organized in terms of having cooperatives, farmers coming together, because then what happens, the cost of acquisition of ensuring a cooperative vis-a-vis an individual farmer makes a huge difference. So now an insurance company cannot form a cooperative, right? So that role needs to be played by the government. So government needs to come together, ensure that all the farmers of similar profile, similar land holding size, similar sort of crops that they are growing, they needs to come together and form a cooperative. And this cooperative then needs to be linked with the insurance provider or a financial service provider. Now that reduces the cost of serving one client vis-a-vis cost of serving many clients. So that aggregation model plays a very important role. The technology will play an important role, and that was with which I ended my my thoughts, because I think the technology will bring in efficiency, will bring in more transparency to the scheme, and will also reduce the cost at the front end. One of the most important costs, and I think many of you will agree, is the cost of education in making the farmer aware about the scheme. And again, awareness somewhere I also consider at the initial stage is a public good. And that is where the government needs to come in. So one is government is coming because of the trust, because in many countries, the farmers trust the government more. The government has more access to the farmers, but also this consumer education and marketing generally takes a significant cost. So if government comes on board in taking up one of the important activity in terms of awareness building, it also reduces cost. The basis risk, yes, it's very important, especially when we think of index insurance scheme. But again, index insurance scheme is the solution when it comes to smallholder farmers, because if we can't do indemnity-based insurance programs, it will become very expensive. It is not feasible, right? When it comes to 0.3, 0.4 hectares of land you are trying to insure. So it has to be index-based insurance scheme. The basis risk comes in, and that is where the data from various sources needs to come in place, using satellite data, so it depends on what sort of product we are thinking, using local weather stations if we do not have local weather stations. And sometimes when we try to design area yield index insurance scheme, basically you try to address some level of basis risk which comes from weather index insurance scheme. But again, the challenge of data comes in. So in case of Rwanda, in case of livestock, we have an individual mortality based risk cover. There are reasons behind it of designing. One is to address the basis risk, but also the nature of the livestock here, it's more of closed gauging, microclimate zone. So again, disease plays a very important role. So that is one of the reasons why In Rwanda, it was individual mortality-based risk cover when it comes to livestock insurance. On crop insurance, again, it is more of area yield index insurance scheme. That basis risk remains, but as I said, we need to use various sources of data and information to address some of those anomalies that we see. Yeah.
Yes, thank you, Andev. Now questions are coming, so many, but really, I think some of them I can give. So farmers with small size, kind of areas where they're cultivating, can they access agriculture insurance? I think that's yes, and that is happening in Rwanda. How agriculture insurance can be the solution for farmers with poor access to credit? Probably you can talk to that just briefly.
Yeah, so you see, that's what I said, the farmers doesn't have access to credit. And today when we try to bundle insurance with credit, it's not only the insurers who are benefiting, but even the financial institution, the lending institution benefits from it as well. Because one of the biggest risks when it comes to agriculture credit is the risk of default, right? And default because of the production related risk, which can be addressed through insurance scheme. Now that again comes to the product design. So the product needs to respond to all the risks. So suppose if I'm only responding to, I'm just giving an example, provided you have yield data, but we are just designing an insurance scheme which cover drought, but pest and disease is one of the important risks in one of the region. Then in that particular region, the financial institution or the lending institution will still not be interested in the product bundling because all the risks are not getting covered. So I think somewhere the insurance needs to address those risks, predominant production related risks, and then the bundling needs to happen. And from a financial institution perspective, it not only gives access to new clients, but even they increases their loan book size. The other way of looking at it is, if I am a farmer, if I am taking 100 USD, I now take 105 USD from a lending institution. That 5 USD is going for insurance premium. So me as a lending institution, my loan size has now increased from $100 to $105. And this $5, which is being premium financed by the lending institution, this $5 can also be earned interest on it and being amortized over the loan tenure. So there is an interest earning as well. Yes, it doesn't contribute significantly to their overall profitability of a financial institution, the lending institution, but still it makes a lot of sense. So that is how the bundling needs to happen.
That's great. Thank you very much. So the other questions, I think they can be, because we share the presentations, and all these presentations have contact details for the presenters, so you can write to them and they will respond, especially around smart subsidy scheme from Gian. But the last question, which is very important from Ovia, and I feel like I can't just overlook it. So he says the presentations done so far focused on the solutions in insurance. Or solution insurance can bring, and it's being realized really in different markets. So what about product profitability? And when the insurance companies, can they expect a viable business perspective, taking into consideration risk mitigation in place? So it's all about really sustainability of these products.
I think, sorry.
And that is really, the question is, we always look at these aspects where who is doing and who is paying now. If government is paying with subsidies and government is doing a lot, awareness and so on. So in the future, who will do and who will pay? So that's very critical for the providers.
Yeah, exactly. You see, just to answer on the profitability side, I think it goes without saying not only agriculture insurance, but agriculture insurance in particular. I think in insurance, the size matters, the law of large numbers. And it matters more when it comes to agriculture insurance in particular, when you are trying to address the risk in per se. And also the spread of risk. So I think to address this, I think the two important thing that needs to happen is, one is the scale and another is the spread across the value chain, right? And you see, end of the day, it is not that the agricultural insurance is profitable or not profitable, because it cannot be seen by season wise, right? It has to be built on portfolio over the years, right? It might be just to start with, and the season started with a drought and we lost the money. That doesn't mean that the agricultural insurance scheme is not profitable. Or we started the scheme and there was no drought, first 3 seasons went very well. Again, it doesn't mean that the scheme is very profitable. So I think what matters is the most is, are we putting the right pillars or the right enablers which will actually help in reaching scale? Are we actually assisting in organized value chain, right? So I think those things are more important. And that's the reason, again, I want to draw back by saying that what is important at the end of the day is create a sector and de-risk the sector. And insurance should be only one of those pillars, right? So if I'm an insurance company, when I look at the profitability, yes, but my more important dialogue with the channel partner, with the government should be is how we are reaching more scale, how we are seeing that the farmers are getting seeds on time. So I think those risk mitigation measures are so important. Whether the farmers are getting good quality of seeds, whether the farmers are having access to inputs, whether the farmers are having access to market, because that also shows that yes, farmer will come back for the next season. I think those things are very important along with insurance to drive profitability overall.
That's fantastic. Thank you, Andep. So I want to stop here and give you all a health break for 6 minutes before we join the next session. So thank you very much, my panelists. It was very important to hear your views, and you have indeed shared what you're doing and what you consider would be the way forward if we are to promote inclusive agriculture insurance. So thank you, and see you in the next session.
Hi, Simon.
Hi.
Okay. Hi, everyone. Thank you so much for attending the opening session. Great discussion already, and setting the scene and context of this very important subject of inclusive agriculture insurance solutions. So I know we had a very short break. I hope everyone now is back from the healthy break, whether you had your tea or your coffee. So yeah, moving on, shifting to practitioners roundtable. So some of the questions that came out of the opening session, which have to do with profitability, client value, and the balance, I think some of the questions that this panel is going to address. So I have the privilege of moderating this session with Israel, Fatma, Simon, Humphrey, and James, all who have been practitioners in this field for quite a while. Simon is the founder of OCO. They've been doing a lot of agriculture insurance. You'll learn more about it. Humphrey from Zambia heads up the agriculture insurance under Mayfair, and James heads up agriculture insurance under AP Insurance in Kenya. And Israel heads up agriculture insurance in Mozambique. And Fatma, hopefully she'll be able to join. She's having some difficulties, but she's also heading up some agriculture insurance in Tanzania. The bios for the speakers are in the brochure that we sent out, so we won't go much time, and I think you'll be able to learn more as we proceed. So just to set the scene, of course, in this session, we will focus on business model. We'll focus on some of the private sector only initiatives and also some initiatives with PPP models, as we just learned from the opening session. We'll focus on some product offerings. So the speakers are going to share some of the product offering, whether it's bundling, single risk or embedded or value-added services. So you'll learn more about that. The panelists are also going to share some experiences, successes, and challenges, and also lessons learned. We will, as we go on, talk about various themes and themes around customer centricity, data, pricing, packaging, how to deal with farmers in remote rural areas, the usage of technology, client value and viability, and of course, client education. And all these themes, I think you must have picked them up in the opening session. But just to set the scene, when we look at the spectrum of inclusive insurance, so we know that there's been a lot of success with credit, simple life products, and also term life to some extent. And then we've seen some emergence of personal accident, hospital cash, property, and whole life. And then, of course, health and agriculture insurance seems to yet not be quite successful in terms of scale and outreach. But in terms of client value, I think we all agree from what was presented even in the opening session that this is where we need a lot of investment. And so the paradox is that where we have success, there's sort of value, but lower than the value that we can achieve with health and agriculture. As you can see from this statistic, it's Africa in 2011, life was dominant as in terms of microinsurance, and in Asia as well, life accidents were dominant. Agriculture was 12%, and then in Africa it was actually 1%. These statistics haven't changed much. Agriculture is still one of the least in terms of scale. So having said that, Sim, I'll start by asking the panelists to share their footprints, and to kickstart, we'll ask Humphrey to share the Mayfair story and footprint. Humphrey.
So just a quick introduction. My name is Humphrey Mulele. I head the agricultural insurance portfolio for Microinsurance Zambia. So Mayfair Insurance Company, Zambia Limited, is part of the Mayfair group of companies. We originate from Kenya, and then in terms of our spread in the region, so we have an office in Tanzania, we have an office in Kigali, Rwanda, we have an office in DR Congo. So, as Mayfair Insurance Company Zambia Limited, we are a general insurance company, basically. And we started accepting business in March 2010, having been duly registered and licensed by the Pensions and Insurance Authority the previous year in the month of September. So, as Mayfair Insurance Zambia, we are the leading agricultural underwriter in Zambia, having identified agriculture as a key economic driver. We cover over 50% of all tobacco grown in the country, as well as other commercially grown crops, field crops in that regard, like maize, soya, seed maize, as well as pharmacies. So with regard to our footprint in inclusive agricultural insurance, agricultural insurance obviously is very key, is a key risk management tool to mitigate risks for farmers. As you know, most of our farmers, the smallholder farmers, their operation is largely dependent on rainfall. And therefore, they are exposed to a lot of climatic risks, such as drought, excessive rainfall, flooding, and so on. So for these small-scale farmers, we've seen tailor-made products, such as the weather index insurance, which basically targets the small to medium-scale farmers. So we ran our first pilot on weather index insurance in 2014, and over the past 7 seasons, we have gradually increased the scope of farmers from the initial 1,500 in the first year to over 1 million farmers in the 2018-2019 season. As of 2020, we, as part of our diversification and value addition, we introduced an index-based livestock insurance product for smallholder farmers, who in this case are pastoralists. Okay, so here, this just goes to show the number of farmers from where we started up to where we are currently. So we started in 2014-2015 season by running a pilot with Zambia National Farmers Union by then, covering 1,500 farmers in 2 districts of Copperbelt province. And then in the next season, which was 2015-2016, we saw an increase in the number of farmers from 1,500 to 8,950. This again was because we had two more aggregators coming on board in addition to the Zambia National Farmers Union. And then in the following season, which was 2016-2017, we saw an increase, which was almost double. So this went up to 18,500 farmers. And then 2017-2018, we increased from 27. This was after now we entered into that partnership with government to provide insurance on the Farmer Input Support Program, where in total we had 905,136 farmers countrywide. So from 18,000, you can see the jump from 18,500 to 905,000. And then the following season, again, we saw a further upscale. So to about over 1 million farmers. And then in 2019-2020, we saw a reduction. The reason was for this reduction, basically, was because the client decided to bring on board a provider to provide an area yield product. So this was a consortium of companies, I think, working with one of the service providers. So that Madison, Zambia State, and Professional. So from here, we lost 15% thereabout of the portfolio to the competition because of that area yield introduction. And then last season, which was 2020-2021, we saw a further reduction. So from 963, it went down to 636,498. Again, because there was a further increase. So from the 15%, it increased to about 40%. So this 636,000 represents only about 60% of the entire portfolio that we remained with. 40% went to the competition under the area yield insurance. Okay.
Yeah. Thank you so much, Humphrey, for that. I'll move to Mozambique, ask Israel to share Holland's journey as well.
Thank you very much, Lemmy, and greetings to all participants in this session. In terms of our experience in Mozambique, we've had an experience which is more or less similar to the startup phases that have been presented by Humphrey. And in order to assist the people that may want to read further on some of the work that we've done in Mozambique, I've attached 5 links. And these 5 links sort of allow you to access our stories and to understand what we have been through. The first link, I just thought, let me edit because I heard Dirk talking about extreme climatic events in Germany. I would like to advise all participants that, in fact, Mozambique, in the most recent report of the German Watch, was rated as the most vulnerable country in the world to extreme climatic events. And this is the country where we are operating from. And if you go to page 8 and page 13 in that report, you get a chance to see how we ended up as the most vulnerable country to extreme climatic events in 2019 following Cyclone 19. And then on page 13, when they present an assessment on long-term impact of climate events, Mozambique is the only African country in the top 10 in terms of vulnerability. Then in Janek's presentation, he spoke about 5% being the rate of protection of low-income segments in the developing world. And as some of you may know, if you look at the Sigma Swiss Re report, Mozambique is far lower than that rate. We are seated at 1% penetration rate of the overall insurance. And when you look at agriculture itself, we're a tiny fraction of 1%. Ian Dave spoke about the importance of agriculture in terms of creating employment. I would like to confirm that this is also important, very true for Mozambique. Agriculture accounts for 70% of employment. But I would like to also mention that despite the importance of agriculture in Mozambique and the rest of the African continent, we have noticed that agriculture has suffered a rapid decline since the period of independence in the 1960s. And as a result of this observation of the African Union of the decline of agriculture, despite all the fancy talk, we then had a Maputo Declaration of 2003 acknowledging the importance of supporting agriculture, and the Malabo Declaration of 2014 emphasizing, amongst other things, the importance of building resilience. And I would like to also acknowledge an important contribution from Wilkinson on how the insurance process can be a long journey. And in terms of our long journey, starting from the period when we had 5,733 farmers, and in the following year, we managed to grow it to 11,426, and we are currently seated at nearly 34,400. The product that we are doing at this stage involves bundling with principally a seed supplier, and we are doing this in partnership with a seed company called Phoenix in a project where we have some support from USAID and NCBA CLUSA. The World Food Programme has also started their rural resilience initiatives in Mozambique with a population of 2,000. And we are also currently we've just completed a feasibility study on livestock with the support of Celsius Pro. So those are some of the things that we're going to do. So in terms of stage of development, we are very much in the early startup phase. Thank you, Lemmy.
Okay. Thank you so much, Israel. And we can, I know we're going to have more discussion to learn more of the experiences there. And you are right, the journey really, it looks like Zambia when we started, in terms of numbers. And we're hoping you can also jump soon to millions. So we'll hear more about that. Simon, thank you so much for your being available to share your story. You've been very active in this space, so we would love to hear your footprints as well. Okay, it seems we have lost Simon. So I think when he comes back, we can hear the story. So we could proceed. As soon as he comes back, we can always... Yeah, let's hear from James. James is giving us the experience of AP insurance. James.
Good afternoon, good morning, everyone, depending on wherever you are. My name is James Papa. I am in charge of agriculture business at APA Insurance Limited in Kenya. I won't be able to share any presentation for now, but after this conference, I'll be able to share any presentation to you guys. So in brief, I'll just introduce my company, tell you about what we've been doing, and then we can interact more. I work with the APA Insurance Company Limited. As I've said before, I'm in charge of agriculture business. Doing small other micro products like micro property, hospitalization cash, but basically I focus more on agriculture insurance. So in brief today, I'll be talking about two products, area yield index insurance and an NDVI product, index-based livestock insurance, sharing our experiences. But just for introduction purposes, we started this insurance way back in 2016 on partnership with the government, Ministry of Agriculture in Kenya. And our experiences has been so good in terms of growth in numbers, both in premiums and farmers level. In 2016, we started with a pilot in 3 counties in Kenya, and we were able to recruit 542 farmers. Just to go back, we've been working in private partnership with the government, whereby they've been supporting us in terms of paying 50% subsidy to our smallholders farmers. And we've also been working with 6 other insurance companies in Kenya in a consortium, a pool where we share the risk and working together in terms of marketing activities and farmers awareness on this product. So in 2016, with a company of 6 members, we were able to recruit 542 farmers, collected a premium of approximately 1 million Kenya shillings. In 2017, because I think of a little awareness, because in 2016 we had a little claim of approximately 100,000 Kenya shillings, and with government support, the numbers jumped to 200,000 farmers, premium of 78 million Kenya shillings. 2018, we also experienced a further growth of 300,000 farmers. Premium also grew to 115 million Kenya shillings. 2019, premium grew, farmers base increased to 479,000 farmers, and premium grew also to 178 million Kenya shillings. In 2020, despite the COVID challenge, I think through our aggregator model and still with the government support in terms of subsidy, we managed to recruit 400,000 farmers. There's a reduction in numbers of farmers that we recruited, but amazingly, the number of premium improved to 280 million Kenya shillings. This year, for the long range season, there's a different story. I think now is when we began to feel a bit of the COVID-19 effects in terms of disposable income from the farmer side, and also financial challenges from some of the aggregators, where we managed only to recruit 100,000 farmers, all the way from 400,000 farmers. And so far for the long range, we've collected 100 million Kenya shillings. Another factor that has really challenged us this year in terms of the numbers is that the subsidy challenge from the government. There's usually a challenge of delay subsidy and the limitation on how much subsidy we receive from the government. So from last year, long range, that is early in March, we started having discussion with some of our aggregators and our distribution agents that if we can begin challenging the smallholder farmers to start paying on their own the full premium. And we've seen some changes whereby some of the aggregators this year have paid the full premium. Some farmers have begun paying their full premiums, and we begin seeing the good impact on awareness and our experiences for the last 5 years. That is with regards to area yield index insurance. For index-based livestock insurance, in 2050, this is purely 100% subsidized by the government, although as a company, we've been trying also to do voluntary sales that whereby farmers support themselves or buy insurance on their own. And from 2015 to date, we've just cumulatively managed to insure approximately 55,000 pastoralists, mainly in 8 ASAL counties in Kenya. And out of that, cumulatively, we've collected a premium of approximately 500 million Kenya shillings. But again, we've paid a claim of 750 million Kenya shillings. From our discussion moving forward, we'll be able to get the nitty-gritties of what happened, what are some of the challenges, but basically from government support in terms of subsidy, good reinsurance support, and working together as a pool of the 6 other agricultural insurance companies in Kenya. That's our journey so far. Thank you so much, Nemi.
Thank you so much, James. And to just get the real picture, we're going to play a video. And I must say, this was one of the videos that got APA Insurance an award in this area. So let's just play the video just to, I think, get a feel of the action.
Kenya, 50 million inhabitants, about 75% of whom live from agriculture, most often for their own sustenance. Each year, farmers can usually count on 2 rainy seasons. But with climate change, rain has become capricious, either arriving late or in insufficient quantity. Frida has 40 acres where she grows maize, but her harvest has become more and more irregular.
Saa zingine mvua inakosa, kama saa hii tumepanda, jua imewaka, hatujui kama tutavuna, na hatuna namna ingine, hata kupata maji ya kulima ni shinda. Sasa sisi tunangojea tu Mungu.
Far from her field in the capital Nairobi, the insurance company APA has developed a solution for small farmers weakened by the uncertainties of the climate. APA offers an aerial yield index insurance.
Through the Ministry of Agriculture, we know the amount of yield that a particular area has. So we will then cover the farmer for that yield, and we pay up to 80%. So if a farmer has a lower yield than 80%, we give them the difference between whatever they have achieved and up to 80%.
APA officers are on site in 27 of Kenya's 47 departments. There they explain the principle of insurance to smallholder farmers like Frida. Farmers register per season. Following a poor harvest last year, Frida received compensation from the insurance company, paid directly on her smartphone.
Nilifurahi sana. Ndio sasa sikuwa na kakitu. Nikafurahi sana. Mpaka nikaenda nikauliza wenzangu wenye tuliregister na wao, kuna kitu yote umepata? Wakaniambia ndio. So sisi wote tulifurahia mpaka tukasema hiyo chama yetu tutaiendeleza mpaka mwisho. Sasa tukipata mtu kutushika mkono vizuri.
Farmers are not the only ones struggling with climate change. Struck by drought, breeders struggle to find forage for their livestock.
Sababu sasa nini kiangazi sasa inaendelea kuja na nimepoteza mbuzi 10 na ng'ombe 1.
Here again, APA Insurance seeks to offer an alternative in the form of an index-based livestock insurance. The forage available for livestock is calculated by satellite. If it is below the average index, breeders are compensated.
These local people don't understand what is insurance. They have never heard about insurance. It took us some time for them now to understand, okay, it works. Yeah.
Okay. So that's FPA's journey, and thank you, Israel, thank you, Humphrey, thank you, James, for sharing your journey so far. So we now dive deeper to learn more of the experiences, and I would love now Humphrey to start sharing some of the experiences, really focusing on some of the successes and challenges as well, and of course building on some of the questions that came in the opening session on profitability and also meeting value, meeting scale, and so on. So we'll start with Humphrey.
Thanks, Lemmy. So I'm going to look at challenges and successes in our journey over the last 6-7 seasons. So I will start with the challenges. So in terms of the challenges, awareness is a key challenge, because insurance being what it is, people have a low level of understanding of insurance, more so when you talk about index insurance, when you bring in issues of satellite, issues of basis risk, issues of monitoring. So awareness in terms of the gaps that exist in the understanding of the product has been a challenge. So what we have done in order to try and bridge that gap really is we have carried out sensitization meetings, and this for us I think has been a success that I can highlight, because we've managed to bridge that information gap over time. When we started initially in 2017, we were doing what we call the training of trainers, where we had meetings with field staff and targeted farmers. So this field staff from the Ministry of Agriculture, who would then interface with the farmers and then share with the farmers some of the product features. And then further, we went on to distribute flyers and radio spot adverts, so in local languages. So we had, in each area where we went, we identified the major local languages, and we had flyers printed in that local languages, in the specific local language, to really highlight the features of the product. So this for us was also a success. And then in terms of, also when you look at, with the advent of COVID now, before COVID, we had those field meetings with staff where we had large groupings of farmers. But with the coming of COVID, we now reduced the target group. So we would meet a few field staff and then meet a few selected farmers in a particular location. Also, that worked well, because then our targeted group was much smaller, and therefore most of that information that was cascaded was quite effective. The other challenge basically is to do with digitalization. So digitalization is very, very key because as you upscale, if you look at those numbers I started with, a few thousands, 1,500, 8,000, and then all of a sudden you find you have a million farmers. So it becomes very key to have a digital solution, which is basically an end-to-end solution. So what we mean by end-to-end solution is that your digital solution will address all the steps in the customer journey. So issues of registration, issues of sensitization, issues of premium collection, also issues of claims distribution. So very, very key. So in the absence of digitalization, especially as you upscale, it becomes very, very difficult really to deal with spreadsheets. And then the other challenge really here is to say that insurance, as you've heard from the previous speakers, is difficult to deploy as a standalone product. What happens in that regard is that you have to bundle it with another service, another financial service like credit, like we've heard. In terms of value addition, really, you have to provide it as a value addition to farmers who are practicing, for example, conservation agriculture, like on the RF4 product in Southern Province. And then, like, in addition to that, also there's this where you bundle it with credit. Therefore, once you do that, it becomes easy for you to sell. And then also in terms of the successes, we embarked on these public-private partnerships, which were based, so with government and non-government institutions, which were mostly based on issues to do with trust, with shared goals or shared vision, respect, and volumes. And then additionally, we had in our product development process and improvement, we employed a customer-centric approach, which was basically a need-based approach, which allowed us to understand or appreciate the needs of our customers. So in short, we had to empathize with the small-scale farmer. We had to, in the design process, and then we had to do some kind of ideation of the product. Then we did a prototype, and then we now tested. So this, from the pilots that we've done before, even before FSD, I think this is the approach that we used. And then also as a challenge, basis risk. Basis risk is a major challenge in weather index insurance. Basis risk basically refers to that mismatch between your satellite information and the actual experience on the ground. So more often than not, you find that there's a mismatch. When you go on the ground, you find that sometimes there are no payouts. And then, when you go back to satellite data, it tells you that there are triggered payouts, or vice versa. So how we've dealt with this basis risk issue, we've done two things in the past. Basically, we've carried out limited field verifications by visiting some selected areas, affected areas. And then we have focus group discussion with farmers just to find out how the season went and which were the critical stages in terms of triggering payouts and so on. And then with that information, we've now come back to make adjustments, slight adjustments to our offering in terms of settlement. And then the other thing we've done is that we've deployed automated weather stations and rain gauges in selected areas with the help of our partners, like in Southern Province, so Pemba, we've an automated weather station, and we've installed rain gauges on the ground. So these rain gauges basically help farmers to collect that rainfall data on a monthly basis, and then compare that with the satellite data at the end of the season.
Okay. All right. No, thank you so much, Humphrey, for sharing your experiences. Let me move to Israel and just get his experiences as well in terms of what has been some of the challenges they've experienced in their journey so far, and of course some of the successes. So Israel.
Thank you, Lemmy. So in terms of challenges and the successes, I shall not repeat some of the things that have been covered by Humphrey, especially in the area of challenges, because many of them are fairly similar across the different territories. I will maybe just focus on the ones that are particularly significant for Mozambique. In terms of challenges, I would like to emphasize that there must be a sound underlying agricultural development policy in order for risk transfer initiatives to be launched successfully. If, as a country, the agricultural development policy is still in embryonic stages, and if in terms of macroeconomic policy and historical background, you do not have things like a grain marketing board as you'd have in some of the neighboring territories, it makes it even tougher. And in fact, one of the questions that I raised for the previous group, but unfortunately, Bosco ran out of time, Jean Bosco ran out of time, but the point that I'd raised for the previous group, which is a challenge I would like to mention, is around those areas that were also identified by I&F as critical roles to play of the government in terms of generating and availing data when that is not happening, when you don't have agricultural surveys, when you don't have agricultural extension, that becomes a challenge. So for me, when we're discussing about some of these interventions in agriculture, it's quite important to be aware, I think, of the historical context, and it's even worse in an environment like Mozambique, which immediately at independence in 1975 went into a civil war that was highly destructive. So a lot of infrastructure was damaged and disrupted, and the government has many other priorities. So this is a big limiting factor. But we will not stop. We will continue. And then Lemmy, when I spoke about us being in the early stages relative to what Humphrey presented, and thank you very much for the hope that we could experience a big jump. But in order for that big jump to happen, it's critical to actually have the public sector support. If you don't have, because that's the key distinction, that you've got a private sector insurance market, piloting, trying out things, and as Betty Wilkinson mentioned, demonstrating and doing the presentations. But if you actually don't get the nod, if you actually don't get the alignment at policy level, it's very difficult to get that big jump unless you have deep pockets in order to be able to have the huge capital outlay that is required to look at other distribution options that allow you to operate at the same level and creating national infrastructure where it doesn't exist as a private sector operator. And Lemmy, as you can imagine, I am responsible for other classes of insurance business. And when you look at the profit margins on motor, on oil and gas, it's very easy for a private sector shareholder to say, okay, stop, we have piloted, let's get on neatly. Nation building, we are not exactly the government. Let's wait for conditions to come right. So these are the challenges. These are the very realistic challenges that we have to work with in terms of overcoming our limitations. In terms of successes, I think the most important experience that we had was that, notwithstanding the impact of COVID in the last season, we saw an unanticipated threefold increase in number of farmers. So the 34,400 sounds tiny compared to some of the national sort of projects that are supported by governments. But for us on the ground, and pushing it on private sector to private sector operations, it's definitely important, and we will push, and we are targeting for 50,000 in the next season if there is no public support, which we doubt will happen. So that's the first thing that we have experienced, and we've got some interesting initiatives to build on that growth, because we are seeing it and it's actually growing. And then the second thing that we have done, which once again is unique to Mozambique and to our experience, is that we discovered that there is some African literature, traditional literature, African folklore, which is actually quite an important vehicle for education in traditional African societies. And what we have found, Lemmy, we have actually found that one of the stories actually talks about a drought. And this story about the drought is part of African traditions in a group of language which is called Bantu. Bantu, that's also an important word, because Bantu, although there are various dialects in countries like Mozambique, where you will have 20 dialects or so, the underlying mother language, which is Bantu, is what is used by the majority of the population. And the total population for that is in excess of 300 million across the African continent. So most of the countries in East, Central, and Southern Africa, the different dialects that they speak, they have an underlying root. It's a bit like talking about Latin and French, an underlying root, which is called Bantu, which is similar. And within that language system, there is a traditional practice called Ngano, which is an African folklore. And within that folklore, there is a story that most people that know African Bantu traditional stories would know about, which talks about a natural catastrophe of a drought, which happened many, many years ago in the past. And the animals that are involved in this folklore story, instead of sitting back and waiting for Deus Ex Machina, for divine intervention, they took certain measures to protect themselves. So what we have been doing, Lemmy, and I've absolutely enjoyed it, is that we have published a traditional story from Mozambique. And when we present the cover to the smallholder farmers and we say, tell us what happened, they know the story, they tell us the story. And then we turn around to them and we say, okay, you've told us this traditional story. When you tell the story to your children, what are the lessons? What are the lessons that you learn from the story? And interestingly enough, the stories have to do with being aware of the things such as climatic conditions affecting you. The story has to do with what measures can you take to protect yourself. The stories talk about how can you pool resources together in order to protect yourself. So guys, this is African traditional oral history as the root to the origins of the practice of risk transfer. Because, and I enjoy saying this, because when you talk to insurance people and you say, what are the origins of insurance? They talk about China, and they talk about London, and they talk about France and Portugal. But we actually are disconnected from our African traditions, and we are actually not aware how some of our traditional practices already contain elements of risk management. And the key success that we are really excited about, the story we love to tell, is that we have found a way of connecting with the target population in a very realistic way around risk. Thank you.
Yeah, very interesting, Israel, and I've heard that story, from you, and every time you share it, it's quite interesting to to see how you've been able to leverage something that is people are used to, and then you build on insurance client education. I just wanted to ask you a question, and I think I'll ask Humphrey as well, and James. So you talked about one of the critical challenges about investment. And what I've seen in most of the markets that I've been privileged to work in is that you always find one or two insurers that are really deepening their footprint and, trying out, agriculture insurance, or in some cases, even inclusive insurance. So what makes Hollard, sustain its interest in agriculture, knowing that the book is not yet there, but, it's not as profitable as the other lines of business. And yet you are now really moving to additional, investments and, moving to 50,000 clients. So where does Hollard get that, momentum to say, look, let's carry on here. This will be profitable in the end. And as I ask you, of course, I'm also trying to say where we've seen success. The jump has been out of PPP model, and it's not yet happening in Mozambique. So your growth pattern could be slightly slower, but eventually you get to the millions, and which is what we want you to achieve. So I just wanted to really get from you, from an investment perspective, what goes on in the boardroom to justify that let's carry on doing this. Yeah.
Excellent question, Lemmy. So once again, what I'm going to explain is been our experience in Hollard. It's fairly unique to Mozambique. So first and foremost, despite quite a lot of Afro-pessimism from many quarters, when we established Hollard in Mozambique, there was quite a lot of skepticism on how the company was going to operate. And Lemmy, in the Hollard Group, and Hollard is located in South Africa, Botswana, Namibia, Lesotho, Zambia, and Ghana, as well as abroad. And we are also part of a bigger group following the acquisition of 25% of Hollard by Tokyo Marine. So we're quite a huge group. But we hold the record for the quickest return on equity. And at that stage, we were doing traditional insurance business. So our company has been exceptionally resilient with traditional insurance types, and we've performed well, and we continue to grow from strength to strength. So on the back of the success in traditional insurance, we have deliberately negotiated upfront for a social impact goal, where we say to ourselves, right now we are 34,400. By 2025, we should be above 100,000 smallholder farmers covered by Hollard, and we will continue fighting and doing it, even where the costs of setting up the technology, the index consultation, as well as the claims, because there's quite a lot of claims volatility, and the costs of consumer education, even when the costs clearly illustrate that as a line of business, index insurance is very poor compared to everything else. And when I talk about index insurance and other lines of business, let me give you a statistic which is quite interesting. If you take, Lemmy, the financial report of the insurance market of Mozambique, the loss ratio, the amount of claims paid relative to premium for traditional insurance is between 30 and 50%. If you now look at our index projects, some of our pilots were in the region of 270%. We've had 83%. So definitely not attractive in terms of financial soundness, but because we insisted with our shareholders that because agriculture represents 70% of employment in Mozambique, because agriculture is the future, as per the Maputo Declaration and the Maputo Malabo Declaration, where even the leadership of the African Union recognizes the neglect of agriculture and that we need to do something about it. So we are saying, as part of giving back to the society where we are located, we need to do this. And even if we don't get Insure Resilience and MunichRe and all these international organizations, even if they don't support us, we are not going to stop. We will carry on with our own resources because we are concerned about it, and we actually believe that we can get it right. And probably what we are going to develop, even if we don't get a big jump, is probably an interesting model to sustainability, working with the private sector in a more realistic project with costs that are based on a more realistic business framework. And one of the things, Lemmy, I would love to do, and I won't do it now because I need a lot of time, is to show you how, with the seed company Phoenix, we were able to say your seed has been costing 100 meticais before bundling with insurance. We would like you to bundle with insurance, but we still want you to charge 100 meticais. Hard sell like you can't believe. Because everybody, when they're saying bundling, they are saying 100 plus 5% for insurance.
Yeah.
So insurance sticks out like a sore finger. We are saying, let's do models where if the underlying product is costing 100 meticais, after you bundled insurance, it must still cost 100 meticais. And how do you do that? You negotiate with the aggregator and you make them realize either the things that you're doing to enhance their product or the investment that you're going to do to replace some of their marketing initiatives to support the underlying product. So for me, the bundling needs to be a smart bundling. And once again, I need more time to talk about some of these frameworks. And because we haven't had the kind of support from the public and from the typical international sponsors, we've been forced to explore different ways of doing things, and we don't regret it. And we've negotiated for the space with our shareholders, and we've said we are going to take losses. And it's important, in fact, to manage expectations upfront. Don't give them an impression that agriculture index insurance is like fire, is like motor, the traditional lines of business, because it isn't.
Yeah. That's very rewarding to hear, Israel. Thanks so much for sharing. James, perhaps we could move to Kenya, and we also try to get some insights from you in terms of APA's interest and sustenance when it comes to agriculture insurance. And I know Ashok, the CEO of AP, has a lot of passion, so I think maybe we wanted to find out from your end as well, what has been one of the most challenging when it comes to agriculture insurance, but also the question around how does APA sustain its investment when it comes to agriculture insurance. I think when you gave the ratios as well, you did show in some cases where the claims ratio is above 100, and yet APA Insurance is really still in this business. So over to you, James.
Thank you, Lemmy. Maybe if I can just start with the last question on how we managed to carry on with this line of business despite some years having very bad loss ratios. To start with, maybe just to support what Israel has said, is that we know where we really want to go, and number one, we've got support from the shareholders, and as Lemmy said, our group CEO is very passionate on any issue related to inclusive insurance, agri included in that. So from the organization perspective, we know potentially where this market can take us. As in sub-Saharan Africa, it's known that we have a lot of many smallholders, clients out there that are not supported. And we believe in scale, and we know that one day, one time that we are going to break even when we have these numbers. So the stakeholders believe that one day, one time, with great awareness, with support from the insurance, with great partnership, we are headed to a great future where with scale, we'll be able to recoup all our costs. And number two, I believe with experience, and when we talk about experience, I'm talking about data collection, technology development. These are some of the things that we are looking forward to leverage on. There are new technology outside there that are going to help us cut on the cost that we are really trying to bring them down right now. And once these costs are taken care of, then this business lines is going to start doing good. And in terms of data, with experience, I believe we'll be collecting yield data, we'll be collecting weather data, and with the good verified data that we've collected, then it's possible to develop and price good products. Once I believe, especially in agri, with the data you can be able to price the products well, and with good pricing, then we are able to price these products well, and you are able to also to recoup your losses that initial investment. So in these two ways, I believe in future, in the long run, we are going to make it in this line of business. That is just to address how we looked forward to this challenge in terms of investment and terms of business. The challenges, I think the earlier speakers have mentioned some of them, but just to, I'll just address maybe three of them that I'm currently facing from experience. Number one, with area yield, data is key. And currently, yes, we have several sources of data. We collect some of our data from support from the Ministry of Agriculture, from the private sector, from FAO, from NGOs who deal with farmers. So those are some of the data that we use to price our products. But as you know, there are a lot of data uncertainties from all this aggregated data. And with this kind of data, it's so unlikely to come up with a perfect product. So some of the years when you price a product with this kind of data, you end up making losses here and there. You end up maybe overpricing the product here and there. So that has been one of our biggest challenge. But as I mentioned before, with experience, with this continuous business support, line support, we are able to collect good data, verifiable data, and in the long run, we'll be able to price these products accordingly. And I believe we'll have not just good product, but also affordable products that will be able to be afforded by the small scale holders. Number two, on the technology side, I'll mention one or two things. Currently, we are relying on Excel to do farmers entry. We are relying on Excel to do claims computation, and it's really hectic. A lot of mistakes happen here and there. So technology-wise, we believe that if, and I know many insurtechs have come up trying to come up with a technology solution in this space. And I know we are going to have this solution soon, so that when it comes to farmers onboarding, farmers awareness, and also claim experiences, we can be able to leverage on technology and save on costs also. That is one of the challenges that we are currently facing. And the last one, although it's not really a challenge, but really has been affecting our line of business, is when it comes to the government subsidy. Yes, it's very important. It helps to cushion the farmers. In case of Kenya, the government through Ministry of Agriculture pays 50% of the subsidy, and the farmers through aggregators or directly to the NGO groups, they are only supposed to pay 50% of the subsidy. But again, this amount is not enough to cater for all the needs of the farmers outside there. The amount of subsidy provided is limited and the demand is so high. So that's one of the challenges when it comes to subsidy. Number two challenge when it comes to the government subsidy is, in Kenya's experience, is delayed settlement of these premiums. And you know the ripple effect when it comes to delayed settlement of premium, where you have negotiated timelines with your reinsurance, with the consortium members that you're supposed to pay their premiums on time. You're supposed to carry out activities related to area yield, that is crop cuts exercise. You're supposed to carry out crop cuts audits, and all this need money. So when you have this delayed settlement from the government side, then it really affects the implementation of these programs. Those are some of major challenges that we currently face. The others are shared, like awareness. Although through the government in Kenya, it has really helped us in terms of awareness, where we work with their local county government staff, agricultural staff, and as it has been mentioned in this session, is that the trust issue has also been taken care of when you work directly with the government support. We've had issues of basis risk, although not so much experience occurs in area yield. Yes, but in some cases it occurs where, in terms of when you decide your unit area of insurance, depending on its size, it can be so huge that some areas are considered to be similar in terms of agri-climates, and then you get that one area might be bigger, so some areas might be affected, whereby you get in the same EAZ or unit area of insurance, they have totally different expectations in terms of yield. So basis risk is still there, but on a minimal scale. And we thank some of our partners that in Kenya, we have a basis risk fund, depending on the project that you're carrying out. So in case of that, the basis risk comes in. But in the long run, we believe the basis risk issue will disappear when we have good data and we are able also to price well and demarcate our unit area of insurance well. Those are some of the challenges we've been facing so far. When it comes to success, which I believe is on a higher side, number one is the government support in terms of government subsidy in premium, and also when it comes to awareness, which is key in any agriculture project. So from the government support, apart just from giving us the subsidy, they have been helping us in awareness programs, and that has been really helpful. Number two, we have been able to see growth since inception in 2015 of the area yield index in Kenya. And over the years, we've been able to record growth in terms of the number of farmers that we're recruiting and also the premium growth. Yes, we've been having some bad years, but I believe across those years, we've been able also to collect good data and improved our pricing. And so far, I think we are doing well, although we still, the growth is still less than 1% generally. Then we see we still have a long way to go to reach a good scale so that we can start breaking even. Another success that we've been having is a good partnership, not just by forming the Kenya Agricultural Insurance Pool, where it's a consortium of 6 other insurance companies that we share the risk, we share the premiums, and APA is privileged to be leading this pool. And this has really helped us be able to spread our risk, carry the risk, and be able to serve our clients efficiently because we are a bigger team. And that has also been one of our successes. And so far, the pool has been very cooperative in Kenya. And that's why you can see we've also been having good experience in growth. Another success is on when it comes to distribution. We don't distribute these area yield products individually as a company or as a consortium, but we have really good partners in terms of NGOs, MFIs. We have aggregators who deal with a certain value chain, who work closely with us, who help us also in the distribution, hence helping us cut on cost in terms of awareness, distribution cost. We also have partners who help us in conducting crop cut experiments. And in this ecosystem, it has really helped us in growth and sustainability of this business. And maybe lastly, I'll talk about the reinsurance supports that we've been having in Kenya. They've really held our hands. We've been able to work with Swiss Re, with Africa Re, Continental Re, Africa Risk Capacity, and several others are coming up strong in supporting agri-insurance in Kenya. And also just to maybe firm up on what really makes us still be in this business despite having some crazy loss ratio is that if our reinsurance companies can be able to see potential in growth or in this sector and they're able to support us, then it only makes sense also for us to continue trying out this business, because we've been having good support from our reinsurance. They're not just helping us in carrying the risk, but they've also been empowering us in terms of product training, awareness, and many other ways that has really helped us as an industry in Kenya. The last success story is on claim settlement. Since inception, I believe on both area yield and index-based livestock insurance, we've been able to pay over 1 billion Kenya shillings since 2016 to date. And from this experience, it has really created an impact in terms of awareness. Many farmers are aware, despite the fact that when it comes to the product side, it might be expensive, but with these claims that we've been paying, it has really helped get the message outside there that there's crop insurance and it really works. So thank you, Lemmy.
Yeah. Thanks, James. A very, very interesting insight, and also Very interesting to learn that your reinsurance support has also contributed to your persistence in agriculture insurance. You talked a lot about the cost structures and the considerations there. We have a very interesting question here, and I'll just read it and maybe ask Israel and Humphrey to attend to it. So there's a question here. Since the loss ratios are generally high in agriculture insurance compared to traditional lines of business, the risk premium will be higher in the medium term. So the question is, how does the other premium components compare? How much higher are acquisition, administration, and claims processing costs for agriculture insurance compared to motor, fire, oil and gas? I can add that Israel talked about it, and also fire. So Israel and Humphrey, quickly, have you done any comparisons with agriculture insurance and the other in terms of other premium cost components?
Okay, thanks, Lemmy. So my view really is that it is true, the risk premium on agribusiness in the midterm is likely to be high. But I think the solution to that lies in scaling up. It also lies in geographical diversification of the portfolio. Because once you are doing this on a pilot basis, the risk is concentrated, because chances are that it will be in one province or one county or one district or whatever it is. So there's a lot of concentration of risk, such that if there's a drought or any adverse risk weather condition, there's a total wipeout. In some cases 100% or even more in terms of your loss ratio. But once you begin to upscale, chances are that you will diversify the risk geographically into other locations. So whereas if you get a hit in one area, it might not be the case in another area. So ultimately, when you balance it out, you find that you easily break down. You easily recover your costs, or you easily make a profit. Okay, so once you make that profit, then going forward, there's a chance that the risk in terms of the risk premium will go down because of scale or economies of scale. So really that is the key. I think geographical diversification and upscale.
Okay, Israel.
Thank you, Lemmy. That is actually a very good question, and this is where I ask Lemmy, for you as the moderator, to apologize me. I'm going to be quite controversial because I attend many of these development kind of things, and everyone is always nice and they don't speak the truth. So I'm that kind of thing. I'm going to shoot kind of person. I'm going to shoot from the hip. So to answer the question, first of all, very few African markets, with exception to a limited extent of South Africa, have got pricing models that are as scientific for traditional non-life insurance as what one can do with index insurance and area yield if it is done correctly. Let me repeat it. When we are saying fire and we are saying we want market rates in Kenya for motor, and when you are saying assets or risks on the non-life, and I want to emphasize this because Agnes is on this call and she is going to quickly say in life the experience is a bit different, and I agree. So non-life insurance, the pricing tends not to have a sound actuarial technical basis based on the claims experience is what we do when we do index insurance and area yield, if we do it correctly. And I say if we do it correctly, because I and Dev spoke about competition, and I saw in India some of the dangers of misguided competition, where people know what is the correct technical price based on the extraction of historical data in the last 20, 30 years. But because people are bidding, they just undercut and try and put the price to get the business. So traditional insurance business tends actually not to be, there is often a lack of actuarially sound technical rating basis in it. And as a result, I spoke about the 30% to 50%. I suspect traditional insurance, we are often overpricing because we are just doing some experience rating. Humphrey spoke about law of large numbers. If you go to Kenya, just as a nice example, or you come to Mozambique, we've got one airline, LAM, and I think they've got one aeroplane. And if you're going to insure aviation insurance, what spread of risk do you have? Often what we call insurance in Africa in particular, because of a lack of spread, it's actually not proper insurance business. And as a result, we over-rely on reinsurance, and James Papa spoke about reinsurance. And it's an important tool in transition and as you grow the portfolio. But there mustn't be an excessive dependence where we don't develop the local market and the local pricing systems. So coming to us, in our experience, the pricing for the index is definitely based on the areas that we're intending to cover, using historical experience monitored for those specific areas in the last 20 to 30 years. And once again, when we do that, because if you open an insurance company today and you want to do motor, where do you get the data which informs your pricing in terms of cost of risk? Unfortunately, in most African markets, we just kind of copy each other, and we rely on market agreements that kind of fix the price for the benefit of the market. So for me, the pricing, in most instances, depending on the discussions we have had with the actuaries like Agnes, you generally get an understanding of the return periods and how aggressive or how conservative you want to be or how supportive. And obviously, do not design a product where, like traditional insurance in Africa, the loss ratio is less than 50%, and then the consumers don't get to use it because you are setting the trigger at a 1 in 100 years kind of event. So you can be naughty as well in terms of how you design the index and keep it very inaccessible. So when we say index insurance can be unprofitable, it just depends on where you set the triggers and how you put it together. And in our case, when I spoke about the 80%, it's the range we are targeting, and we accept that there will be some variances. So this is one element of pricing, and obviously the question was very loaded because we need a lot of time to talk about it. The other element are the transactional costs. And also, when you look at an environment like Mozambique, our solvency model is based on the gross portfolio. So when we do, James Papa spoke about reinsurance, when we do reinsurance, in the calculations of the solvency model in Mozambique, there is no solvency relief, there is no deduction for the reinsured portion. You still have to have assets to match your liability at 100%. So this is where the negotiating with the shareholders comes into play, that in a way, other business are actually subsidizing agriculture because of You will do reinsurance, but still your investments need to keep you solvent in that line of business. And you don't overcharge the admin fees and the commissions, which is also one of the areas where we can be extremely extractive in Africa, that we're sending everything to reinsurance and then we're keeping just the commissions. That also doesn't help. So transactional costs are an important and sensitive point. I would love to literally have a discussion on just what would we call it, responsible finance, and the things that we should be doing to make sure that we're not only giving value for money, but that not too much value is lost in transactional costs. And that's why I spoke about capital outlay to get some of the infrastructure that may be needed to get the volumes, like what you saw in Zambia, the 1 million. Because if I were to go to my type of mobile operators that are charging a minimum of $100,000 just to try and design it, by the time the product is ready and I try to pass those costs back into the product just loses affordability. And once again, I would love to talk about subsidies, I would love to talk about transactional costs, but once again, our space is limited. Sorry.
Okay.
I hope I wasn't too controversial.
No, I know your points, Israel. So thanks for sharing with everyone else. So I know we are nearly running out of time, but one of our speakers experienced challenges to connect, but she's finally joined us. Fatma, I'll give you a chance to share your footprints and your experiences in one lot, and then we can see how we can get to the end of the session today. Can you talk about the balance between profitability and client value, and maybe just quickly one or two things that you have been doing? I know you had prepared this, so perhaps you can just share a little bit here in terms of how you create that balance between connectivity. You talked about basis risk, but also how do you just sustain the farmer's interest as well? Because sometimes I've been in the field where farmers literally say, my neighbor over there, not far from here, they got a payout and we didn't because the rainfall reading here showed that we were not due for a payout. So how are you able to balance that? Are there instances where you go out of your way to ensure that you still protect the image of insurance? So Humphrey.
Okay, thanks, Lemmy. So I will start with client value. So the issue of client value, really, it is how the product speaks to issues of responsiveness, issues of access, and issues of affordability. In addition to that, it also speaks to issues of experience after a bad experience. So when farmers experience adverse weather conditions, it is the real value really lies in the payout that they receive at the end of the season, because that payout is what goes to address or to mitigate whatever challenges the farmers would have had resulting from that bad experience. So in addressing the issue of client value, what we've done usually is that we have had what I'll call again a need-based approach, where we use the feedback from the clients, season after season, to help us improve on the product, in order to address basis risk, because it's a moving target, really. So we have to keep going back and forth to get that feedback and then use that. So one of the most important things we've done in addressing that particular concern to do with the experience on the ground of the variability of payouts is really to improve on the resolution of the monitoring or the imaging. So previously, we were using a resolution of 10 by 10 kilometers. So going forward, when we went, after we got the feedback from farmers and we saw that there were a lot of, differences in terms of payout sizes, in terms of experience. So we embarked on improving that resolution further. So from the 10 by 10 kilometers, we've now reduced that to 5 kilometers by 5 kilometers. So this is a high resolution, really. So it will make the imaging going forward better, and it will be able to address some of those issues regarding SSRs. The other thing we've done on client value is that is really the issue of accessibility of the product. So this accessibility really owing to the various partnerships, public-private sector partnerships that we've established with government and non-government institutions over the years. So in that regard, we have also embarked on training of trainers, this government staff and non-government field staff, to enable them sensitize farmers on our behalf. So with regard to client value, those are the two things that we have done. And then going to business viability, again, we've been working with, again, this PPP model, which has provided for ease in terms of achieving scale and geographical diversification of the product. So like those numbers I shared, where, from 18,000, once we had these PPPs in place, based on those principles I mentioned, we saw an upscale. So from 18,000 to 1 million plus in one season. Then also, we have, in terms of achieving diversification, we have this inclusive insurance that we've had really has proved to be profitable. Again, so your diversification, it's those issues now, scale, the law of large numbers, and your portfolio diversification. So in the end, it becomes profitable because you have economies of scale coming into play. And then again, in terms of business viability, we have innovated some products as part of our diversification portfolio. We've given options really to our smallholder farmers. We've come up with an NDVI livestock product similar to the one that was shared by our colleague from Kenya. And then we have an area yield insurance product in place, which I think we piloted last season. So, which we hope to upscale this season. So those are the 3 points really under business viability.
Okay. All right. As we wrap up, we'll be going to the wish list. I would like each one of you to talk about what's your wish list, going forward. But before we do that, I wanted to apologize to everyone that we have had 2 speakers who have had challenges, Simon and Fatima, to join the discussion. But so far, I think our panelists have done very well to fill in, the gap, and we would have actually wished we had more time to discuss some of the aspects. Let me just pick 2 questions which are in the Q&A and just ask the panelists to address them. So one will be to James. James, who is supporting you on crop cutting experiment, and could you just give an estimate of the cost of crop cutting per hectare of the crop covered? Hopefully you have that. And then to all the panelists, as you do the wish list, can you also answer the question as on technology, whether technology really is one of the silver bullets when it comes to agriculture, and how do you see technology, helping out on various functions within the agriculture insurance value chain. So I think you can wrap that up as you talk about the wish list. So let me start with James, then move to Humphrey, and then we can finish with his round. Your wish list would be very good to actually capture as well. So let's start with James. James, you can start by answering the question that has been raised, and then you can also give your wish list.
Thank you, Lemmy. If I may start with the question asking about the cost of crop cut in Kenya. Currently, we are working with 2 organizations, actually 3 organizations in Kenya. One is Pula Advisors. I think maybe some of us know Pula Advisors. And then we also work with ECA Africa, and we also work with the Agriculture Ministry, Kenya Bureau of Statistics that help the Ministry of Agriculture in conducting the crop cut exercises. For Pula and ECA Africa, depending on the locations, the number of farmers, and the type of clients that we are dealing with in terms of the premiums that we are targeting. The cost of per crop cut, I'll just give a range, depending on all those factors, ranges from at least $15 per crop cuts, and it goes up to $30 per crop cut. I hope that will be sufficient enough, considering the factors that I've already mentioned. That is for Pula and ECA Africa. For Kenya Bureau of Statistics, that is the crop cuts that they do for us mainly for projects directly sponsored by the Ministry of Agriculture. Their services are also done on a subsidy. On us, it's a 100% subsidy, so we don't pay for those costs. But I believe the Ministry of Agriculture, they have an understanding with the Ministry of Statistics, whereby they have a partnership whereby they help us do the crop cuts in that area. Coming to my wish list, of course, number one, for business sustainability, it is to scale, to reach out to more smallholder farmers. That's the only way we are going to break even and continue getting support from our shareholders. So there are several ways that we might scale. That includes more awareness, support in terms of subsidy programs, improvement of technology, and continuous support from reinsurance partners. So that's really my number one wish list. And my number two wish list is really from the partners supporting the agri sector and inclusive insurance sector, is for just wish for more support in this line of business so that we can have more pilots, we can have more projects, learning projects, and support in this very unique area, so that we can be able to reach scale. And I think those are my two major wish lists: be able to scale and continue support from all the partners and stakeholders in inclusive insurance area. Thank you, Lemmy.
Okay, thanks so much, James. And Humphrey.
Thanks, Lemmy. So in terms of my wish list, really, the first point is really to have an end-to-end digital solution that addresses all the steps in the customer journey. This is very, very important, especially as you upscale. You know, those millions I talked about, without this, really, it can be very difficult. So the starting point there in terms of the customer journey is starting with registration of the farmers, premium collection, sensitization, and claims distribution. So again, this answers this question of technology. Okay, this is very key, actually. The issue of digitalization is very, very key as you upscale, because you need a solution that addresses all these steps in the customer journey. Without that, it becomes very difficult. Yeah, so technology has really assisted in that regard, you know, of having a successful implementation of agri insurance products. The second point really is to have a customer-centric approach in your design process, your product design process and development, where you continue to empathize with the smallholder farmer who is the end user. So in the design process, you know, then those issues now of how you come up with ideas to address his needs. Also in terms of coming up with a prototype, which you can now test and pilot, very, very key. The third point is really to increase on the bundling as a value addition, because like I mentioned, agriculture as a standalone, agriculture insurance as a standalone is a very, very difficult proposition. It can be a difficult proposition. So really you need to bundle it as part of the value addition. So so in terms of bundling, you can bundle it with credit, you can bundle it with other financial services that are available. And then you can also bundle it alongside other risk management tools that are available. For example, conservation agriculture, like we have done on our program with World Food Program, on the RFO program in the Southern Province. So conservation farming, crop diversification, crop rotation, because these are already existing risk management tools that are there. So it becomes easy if you bundle insurance with these tools. Yeah, okay. With that, yeah, sure.
All right. So Israel, your wish list.
Thank you, Lemmy. So in terms of technology, I would like to confirm that yes, technology is a critical enabler. If you take Holland with the staff complement of 70 and only 5 people involved in agriculture, how else would we be able to cover a territory which has surface area of nearly 800,000 square kilometers? So it's a massive territory. So the idea of remote satellite sensing helps us to bridge the gap. And we have had a very good working relationship with eLeaf, Fundasat, in terms of the remote sensing, and then geographic information systems with partnerships with AgriTask. In terms of wish lists, definitely we are anxious to get cost-effective and reliable aggregation partnerships with entities where there is an alignment of interests as well as a genuine concern for risk management, protection, and other considerations for the target population. We would also be keen to look at technology to support distribution, and we have had conversations with the likes of Celsius Pro, Blue Marble and OCO Finance to see what can be done. And finally, we are also keen to launch some exploration for livestock index, hopefully with partnership of Sales Pro. And we've got quite an interesting distribution model, which I would love to talk about as soon as we implement Levy, because we're going to try to do something different once again, because unlike Kenya and Ethiopia, we don't have a government that is that sorted and that's going to help us. So how can a private sector operator just take it from the ground up and work on the assumption that the government will never play a role? Thank you.
Okay. All right. And thanks everyone for joining. So we will conclude with Simon, and Israel just talked about OCO. So Simon had challenges to join back into the call. I'll just give him the last 5 minutes to talk about the wish list, but I think maybe to also just give a little bit about OCO, where they're coming from, and then we can conclude with the wish list. So Simon, welcome back.
Sure, thank you very much, Lenny. Sorry for the inconvenience caused. I'm happy you found 5 minutes for me anyway. So quick words about OCO. What we do is we're not an insurance company. We are positioned as an insurance agent or an insurance broker, and we distribute insurance because we know that distribution is really the key problem in making crop insurance more available. So we work in Mali, and we're launching now in Uganda. We have 10,000 farmers insured in Mali, even more. And we did already some successful pilots in Uganda. And what we allow is that anyone can access crop insurance from their phone without having to take a loan, without having to buy specific seeds or supplies, without having to have internet, just through the mobile operators. So the services like MTN Mobile Money, M-Pesa, Orange Money, etc. And this direct to farmers approach has been kind of our differentiator so far, and it's proving quite successful, but also very challenging because we need to invest a lot of money into acquiring these customers and finding really what works, what doesn't work, because no one really did this before. To conclude and to give my wish list, there are 4 main things that I would like to mention. One is tax exemptions or subsidies. So as many of you know, in Rwanda, there is a program to help crop insurance. In Uganda, there is the Agricultural Insurance Consortium and the National Agricultural Insurance Scheme. Even in Ghana, there is the Ghana Agricultural Insurance Pool. So some countries are putting effort into creating products, making them more affordable, subsidizing them. But many countries still tax insurance the same way other products are taxed. In Mali, it's even worse because it's taxed at 20% when other goods are taxed at 18%. So it's very dissuasive for farmers to pay insurance. If tax can be relieved, can be lowered, or if there can be subsidies, that's really something that can help to promote crop insurance, even if just as a first phase for a few years before it becomes an habit for farmers to get insured. Second thing is financial education. We send agents on the field to go to farms, cooperatives, to villages and explain what is insurance and offer farmers to get insured with OCO. But a lot of our work is in this first thing, to explain what is insurance, how it can benefit farmers, etc. So if governments or institutions could help with financial education, explaining to farmers what is insurance, how it can be beneficial, and then tell them what are the different options available in the market, that would help us a lot to be more efficient. Third is agricultural data. So today we cover against droughts and floods, but if we had more yield information on different crops, on different communes, for example, then we could use machine learning to try to cover more risks and to cover basically any loss of yield. But for that, we would need more data. And the last thing I would like to mention is access. So it can be internet access, and more particularly giving free access to basic services to the population. It can be health services, but in our case, financial information and agricultural information. So if the operators could whitelist So give free access to some set URLs, set websites, so that farmers can get already some information, which is visual, which can be maybe a video, because we know that literacy among farmers is quite poor. So yeah, that would be great, because using text messages is not really sufficient given the low literacy of farmers. So giving more internet access in rural areas and whitelisting URLs for basic services.
Perfect. Thank you so much, Simon, and also for persisting to really join back. I think we've gotten at least a bit of what you're doing. I would encourage participants, if you have any questions for Simon, please get in touch with us. We're happy to direct and get you connected to Simon. I think they are doing exciting work, as you have noticed. So we can now have our lunch. If we had a physical or in-person conference, we would all be heading to the dining or to the restaurant to have a meal. But we'll have a break for about, I think, an hour and 5 minutes. And then at 2, we join back to the facilitator session. So another angle of this is that you've heard from the practitioners in terms of what they're doing to make agriculture insurance sustainable and also provide value. But now we'll flip and say, look, let's look at those who support private sector, government, and other organizations to deepen their footprints. What are their perspectives? What are their experiences? And what do they see as can be done to move this? So thank you very much, everyone, for joining. And apologies for running a little late. I think we have gotten some rich insight from the practitioners, and see you at 2.
A very nice afternoon indeed, everyone. Most welcome to this third session of this very interesting conference on agriculture insurance. My name is Bert-Op-de-Beek. I'm founder of Microinsurance Master, and honored to be facilitating this last panel session before we have a closing session, which will follow straight after this one. We had some interesting talks this morning. First, the scene was sketched in the opening session, where we learned a little bit more about the landscape of agriculture insurance, the role of governments, things that were happening across the continent. And just before lunch, at least if you're in the African time zone, then we had a very insightful passion session. Sorry, it was full of passion indeed, with practitioners, where we learned what some of them were doing. And in this session, we're going to shift gears a little bit and talk to facilitators, enablers, who are there to support the start from agriculture insurance schemes that reach to smallholder farmers, and learn some of the things that they've done in the past, what they're doing, and obviously what are the lessons learned, what are some of the good and the bads of their programs. So I'm joined by a very experienced panel who also have quite some remarkable and original thoughts about the agriculture insurance schemes. So happy to introduce them to you. So we have from FSD Zambia joining is Mawa Lungo. We have from AFR in Rwanda, we have Agnes Uwanyiligira. We have Douglas Dara from GIZ in the Philippines, not in the Philippines, apologies. It's obviously from Zambia. We have Agrutosh Mukherjee from Risk Shields, and Jan Semandeni from the Celsius Pro Consulting Group. I do hope I did say your names more or less correctly, and if not, please don't hesitate to call me out on that one. So as said today, and in this last session, we are going to discuss your perspectives, but obviously to help us to get started with understanding where you're coming from, it would be great to get a better sense on what are the activities that you've been engaged in when it comes to agriculture insurance? And in particular, your role as the enabler that often sits between the different parties involved, the technical assistance provider, the governments, if it's in a PPP scheme, and then the insurance operations. So looking forward to learning a bit of that. And so we're going to do a little bit of the tour here of the different panelists, and as it goes, ladies first. So I would like maybe to ask Agnes to maybe go first and share a little bit, Agnes, what you, with the AFR, with the Access to Finance in Rwanda, have been doing when it comes to agriculture insurance. In the previous sessions, we learned already a little bit of what's happening in Rwanda, also by a really nice video that we have seen in between the sessions. So what's AFR's role and where does agriculture insurance in Rwanda stand?
Thank you very much, Bart, and good afternoon from Kigali, everyone. Access to Finance Rwanda, I'm sure maybe most of you are familiar with AFR. We are a not-for-profit company established in 2010. Our core mission is really to promote financial inclusion and financial sector development. We are really here to catalyze market system changes through partnership with key stakeholders who will continue the journey post-AFR exit. Over the last 10 years, AFR supported a number of financial inclusion interventions to bring the underserved segment of our population into the fold, be it within the banking, savings, digital financial solution spaces, and recently, inclusive insurance. Our journey started as you know as well, around 70% of Rwandan population live in the rural area. I won't dwell much on that. It has been highlighted in the previous session. And many speakers today also really reiterated how vulnerable smallholder farmers are and the need to improve risk management strategy. So Rwanda is not really an exception to this challenge. And we believe at AFR that agriculture insurance is one of the natural solutions to improve farmers' resilience. Bart, you asked about our journey, where we are. So before 2010, I could say like inclusive agriculture insurance offering was almost non-existent, as earlier pilots by the market player didn't reach scale. However, improving farmers' resilience really remained a key priority area for many. So as a market facilitator, in October 2016, AFR brought together key ministries, insurance company, other stakeholders together to brainstorm about possibility of a high-scale, high client value solution to both livestock and crop-related risk. Informed by the consultation, the journey really to demonstrate the value of inclusive agriculture insurance started. As Ian Dev mentioned this morning, AFR commissioned a firm to conduct a feasibility study to design and support the pilot of the public-private partnership model for that inclusive agriculture insurance scheme, now known as NAIS. Is actually dubbed in Kinyarwanda, as you have seen in the video, is called Tekana Urishingiwe Muhinzi Mworozi, and that really translates to smallholder farmers. Feel safe, you are insured. NAIS has two components, the livestock insurance component scheme, and which was launched in April 2019, and the crop component, crop insurance component, which was launched in September 2019. This morning, Ryan, they've shared quite a lot of details on NAIS features, the product, the value we put on customer centricity. Also, Israel, in the second session, shared great insight on area yield index based insurance in general. So I really want to be repeating this. So in a nutshell, we have started the journey, is going well, and I look forward to continue exchanging on what the lesson learned later on. Thank you.
Just as a clarification, Agnes, so apart from being the organization that is in the middle of this entire scheme, is there any specific role that the AFR puts on, like for instance on education, on the technical assistance side? So how should I visualize the role that that AFR plays in that myriad of different organizations that come together?
As a facilitator, I would say our first role is to convene. Once we all believe and really the need for increasing resilience for farmers, so we all understand that's constraint, and AFR as a catalyst and a convener, a facilitator, bring all stakeholders together. When you're bringing in the public sector, that the ministry, the insurance sectors together, and we provide that seed fund to kickstart the insurance journey. Be it we provide technical assistance, which could be from the design, the product development, even the implementation. We even supported setting up a technical support unit within the Ministry of Agriculture, really with a key focus on capacity building and knowledge transfer of a technical assistant firm we have, because we really believe that was a way. Although we are there to launch and the exit, but we want to make sure there's a strong foundation.
And what is the exit that you have? Is there already a final date on the end of this program?
Yes, I would say like we have now handed over to our implementing partners. So we are really continuing the journey with us the last 2 weeks.
Perfect. Thank you so much. To everyone in the audience, I do want to make sure that whatever you have on your mind, questions that you have or contributions, that we will hear them. So maybe not literally, but at least you can put them in the chat or better in the Q&A. Every one of the panelists can see that. We will respond to these questions either in the conversation that we're having or by typing the answer, if that would be a better fit. So we want this to make sure that you get your answers to your questions. So feel free at any time to put them in there. Thank you, Agnes. So with that, let's move to Zambia, where we have a good representation on the panel indeed. And Marwa, you're with FSD Zambia, which is the sister organization, if I may, of Access to Finance Rwanda, also involved in agriculture insurance. We learned a little bit this morning already from your CEO, Betty, about some of the elements of that scheme, and we had Humphrey Mulele from MEFA also talking about his perspective as practitioner. But more in particular, what is FSD Zambia doing to make this happen, to make this consortium of organizations happen and yeah, I believe that you're also involved with the scheme that is supported by the government, right?
Yeah, thanks, Bert. Yeah, and rightly so, we are a sister company to AFR, so we do similar jobs. FSD Zambia is a market facilitator, and so just like AFR, we work with different partners. So we're not a market implementer, but we facilitate processes. So in the agriculture space, yes, we have supported different insurance companies. We have worked with insurance companies in the development of different agriculture products, such as weather index insurance. I know you mentioned it. This was we worked on a weather index insurance product, and we've also supported livestock insurance. So that is something that is recent, but we have also supported some feasibility studies. So each time as FSD Zambia, before we implement anything in any space, and since we're talking about the agriculture space, we do firstly facilitate for any market research or a feasibility study, so that we are sure of whether whatever we are trying to implement in the country is feasible enough. So in the agriculture space, we have supported a feasibility study for crop insurance and also for livestock insurance. And after that, we've also facilitated for a public-private partnership program, which you just alluded to, Bert. And this is a partnership for weather index insurance with the Ministry of Agriculture. We've also built capacity for insurance companies, and we've also facilitated for financial education for the smallholder farmers. So we really believe that before any implementation of any product in the market, everybody should, especially the end user, should be educated about whatever we're trying to implement. So what we do support is we do not go into the market as FSD Zambia, but we work through partners such as the insurance companies to implement any financial education processes. So we support them in terms of coming up with content, translating the content into our different languages so that everybody is able to understand what the product is all about. So our support is in two-pronged. We offer technical assistance and also financial support. In our technical assistance, we do have a number of experts that we do engage to help us with technical support alluded to agriculture insurance. So in terms of technical assistance, we offer the technical assistance through these same experts and even through some of our teams here at FSD Zambia. And so in terms of if there is a new concept, for example, like weather index insurance and insurance companies, we have supported building capacity of insurance teams. And we've also supported trainings and also some workshops as well. So in a nutshell, we have supported the market in terms of technical assistance and also some financial support. The financial support as well, the recent financial support we've had, other than the public-private partnership that you talked about, we have recently come up with an inclusive crop insurance scheme, which came up as a result of the public-private partnership. So one of the things that we thought was if there's a government change or there is any challenge with the government partnership, is it possible that we can have a standalone scheme? And so we have also we are now supporting an inclusive crop insurance scheme, which is not led by any public entity, but it has all private insurance companies. And so in that we've supported it technically, and we've also been supporting it financially. And maybe I will talk about it a little bit later. So we've also engaged other donor companies, donor institutions, also with starting up with initial subsidies as well, because we have noted that the premium that has been, that was priced for the insurance crop insurance scheme was a little bit pricey for our smallholder farmers. So as FSD Zambia, together with other supporting development organizations, we've also supported some smart subsidies also for this crop insurance scheme. Yeah.
A lot of activities indeed, Mawa. Just also to understand, so you mentioned that you support other donor entities. That's within Zambia. I imagine that's not in other countries, right?
So we work with and not support donor entities, but we work with other development organizations that are in the same space as ours. I don't know if they're with us right now, but currently we're working with Musika, and I'm sure we have also been working with Douglas, who also speak with GIZ on some agriculture insurance space, especially in terms of financial education and also in terms of trainings. So at times when there are trainings in and we are all doing something that is similar, we come together as development organizations and support the cause instead of doing it one at a time. So yeah.
Perfect. We obviously can only applaud such a donor coordination. And very quickly to end this introduction, when you talk about financial support, that is coming from your core funding, which is mainly the DFID, right? The British government. It's not that you are channeling the money that you receive from ministries in Zambia. It's from your core funding that you are supporting some organizations, right?
Exactly. Especially when we're dealing with private insurance companies, we also, whenever we are supporting them financially, we expect that they also put in a form of contribution as we are supporting them. This also helps with sustainability. So whenever we are supporting in terms of the financial aspect of it, we advocate for a certain percentage from the private insurers so that they can feel a sense of ownership of any project that we're supporting. Yeah.
Makes sense. Thank you, Mawa. All right, you already alluded that one of your colleagues is on the line as well. So you're not only a sister organization of AFR, but you also have links with our next panelist, which is Douglas Daura, who is with GIZ in Zambia. So when you said about donor coordination, I understand that it will be Douglas as well. So Douglas, good afternoon to you as well. Same question for you, can you briefly sketch a little bit of the activities that GIZ in Zambia is undertaking to promote inclusive agriculture?
Okay, thank you very much. Good afternoon, Beth, and good afternoon, everyone. Before I can get to talk about the genesis of GIZ Agriculture Insurance, I think I'll quickly give you just a brief in terms of what has been happening on the global space. So when we look at what have we done in terms of agriculture insurance, projects around the world, e.g. in Madagascar, Sri Lanka, and Peru, these have been completed, which have been done by GIZ HQ. And then in Thailand, we've basically concentrated on rice. That's what has been done in terms of agriculture insurance. And then at the same time, we've also been engaged in data collection, value-added services, and enabling regulation. And then on the topic as a whole, I would say GIZ is currently finalizing a study on the current state of agriculture insurance worldwide, and this will include an overhaul of the major agricultural insurance schemes that we are working on here in Zambia and also on the global space. So now when we come to Zambia itself, I would say starting from July 2016, there was a start of the GIZ Global Project under Insure Resilience, and this was basically involving implementation, intervention field. And here, what the idea was to look at the supply side and the demand side, because we looked at it and said, okay, fine. When you look at the supply side, you found that there were only two insurance companies then that were providing weather index insurance, because that's our core support. It's been basically on weather index insurance. We're looking at climate insurance products and not really on the indemnity-based products. So when this project came into effect, we had to work with the supply side. These were the insurance companies. So we worked with the likes of Mayfair, and I believe in the code there's also Mr. Mulele that I've been working with closely. And then there was also Focus General Insurance that was also on the space in 2013 when it was when weather index insurance was introduced by Risk Shield, which is AgroTosh again in the core. So it's more like one family here in Zambia.
It
so
looks
with
like
that,
indeed.
yes, thank you. So with that, this is what happened now. In terms of the demand side, we also looked at how can we build a capacity for these intermediaries that we are providing these products. So we got engaged in market development processes where we developed training materials. And in developing these training materials, we had them in English, and also decided to translate them in local languages, the 3 local languages, which is Nyanja, Bemba, and Tonga, so that it's easier for the other ones, the other sector, especially the smallholder farmers that are unable to read English or understand English. So this is what we also did under Insure Resilience. And then for the insurance companies, looking at Mayfair, they already had the capacity, but we still involved part of their staff in trainings. We did trainings in collaboration with ILO, which was looking at product development. How do you price it? How do you come up with payout, reports and everything? So those are exercise that was done in 2019. And also to add on in that, this program is also going to continue this year. We're going to also conduct a training on product development, but this particular time we've gone beyond. The training was on weather index insurance, but now we're going to add another component on index-based livestock insurance. This has come into effect because last year there was a government-to-government negotiations between Zambia and Germany, and the Ministry of Fisheries and Livestock requested support from our end to kind of help them develop index-based livestock insurance. So this is how now this particular year in this training, we'll also have this component added to that. And then in 2018, we basically intensified the works in Zambia through a combined effort from GIZ HQ and Zambia. And then in June 2018, as GIZ, we got into a partnership, which is a develop PPP partnership with a private company called LDC, which is Louis Dreyfus Corporation. It's a big cotton ginning company here in Zambia with a total of 100,000 smallholder farmers. So here, the reason why we got to partner with them was that there was an issue, a cry from the organization that whenever they had different perils affect their cropping in terms of drought or excess rainfall, they were running into losses because there was no component of insurance. This is how we got to train them in different levels, the agricultural managers in their regions, and also their lead farmers, and also their distributors, to train them on weather index insurance, and also went ahead to train their smallholder farmers. And with that, we saw it grow, because at the same time, it also helped LDC also move into riskier areas, because now they had a component of insurance, so they were able to kind of expand their operations. Their smallholder farmers also were able to move from doing 1 hectare to more hectares because there was a component of insurance. And then with that, we saw that loyalty actually increased for the smallholder farmers growing cotton on behalf of LDC. And then LDC also was able now to give out loans to the smallholder farmers, because that worked as collateral, because our smallholder farmers don't have that collateral that the financing companies would give out a loan to, since agriculture is a risk venture. So these are the advantages that we saw. And at the same time, it also reduced side selling. By side selling, what it meant was that smallholder farmers that did not have insurance on the cotton packages would actually sell the cotton to somebody else who goes to their farms to buy. But these people will buy at a higher price because they did not invest any money in the product, as compared to LDC, who's financed you with a finance to get cotton and these are other products that are needed. So you'd find farmers who don't have insurance will decide to sell to somebody else. But in this case, if they've got a component of insurance, they actually take the crop to LDC and they buy it off, and what they owe is knocked off from the loan that they got at the start of the season. And then alongside with working with LDC, we've also worked with Alliance Gineries together with FSD. And then in 2019, this saw the end of the Insure Resilience project. It came to an end, but this also brought in the birth of where we are sitting in now today, which is climate risk insurance and information in Zambia. It's a new project that is running for 3 years with a total cost of with a budget of 2 million euros. So this one has continued now on the components that Insure Resilience had built on. So with this one, we've also continued with the support of the supply side and also the support on the demand side. And then the third part that we've added that was not there before was a component of information, because we realize we are training our smallholder farmers on insurance, but are we providing information in terms of forecast information? So this is another new pillar that we're working with the likes of DMMU, which is Disaster Management Mitigation Unit, and also ZMD, Zambia Meteorological Department, so that we are able to provide this information to our smallholder farmers, and they're able to make an informed decision, as in when do I plant, what crop do I plant. So we don't give them the specifics to say plant this crop, but they have to make an informed decision to do that. So with that, now this is, I think, where we are today in Zambia. And I think our approach, to be clear, is that we are working on a private sector approach. We are basically working with the private companies. Thank you.
Yeah, and your contribution, if I get it correctly, Douglas, has been on training and education to help to facilitate the market development there.
Yes, that has been our support, basically strong in terms of the technical assistance to various stakeholders. Thank you.
Perfect. So we keep on browsing, and there is, as you already pointed out, connections with everyone here on the call. GIZ is one of the strong partners of the Insure Resilience activities. We heard more from that this morning from Yannick, and also Jan, who's with us on the call, has obviously strong ties with Insure Resilience. As Celsius Pro is providing advisory services to the Insure Resilience partners, isn't it, Gian?
Yes, that's right. Thanks, Bert, and thanks for moderating this, and thank you, Lemmy, for the invite as well. Let me give you a bit of a background on Celsius Pro. So we're a Swiss-based insurtech company. We specialize in index and parametric insurance solutions, as well as climate data to some extent. And we actually started as a weather derivatives company over a decade ago, and working mainly with mid to larger sized farmers. But since then, we've moved into facilitating or supporting the growth of inclusive agri-insurance or microinsurance, mainly through two different routes. First of all, we've developed a digital insurance solution for index insurance, where we combine weather data with product administration capabilities. So essentially, we give insurers a one-stop shop to efficiently structure and administer index insurance products. It's important to say that that's a white label solution. So Celsius Pro doesn't have an interest in being a brand name to the end client, but we customize our platform and adjust it to the insurer's needs and branding requirements. And we can usually do that relatively quickly. So we need 1 or 2 months to do the basic modifications as such. And we see that digital solution as a real facilitating component when it comes to launching such products in the market. And on the consulting side there as well, we act as a consultant on projects initiated by the development sector or multilaterals, where we then usually either implement our digital solution or we support product structuring. And a few examples of that would be with FSD Zambia, as Mawa alluded to before, on the inclusive crop insurance scheme, where we work with KMD, KM Dastur, Holland and Professional Insurance. Another example would be the Insure Resilience Solutions Fund. So that's another Insure Resilience name that we can mention, where we support land bank insurance in South Africa. And as Israel mentioned, we worked with Holland, Mozambique on a feasibility study for livestock insurance. And the second arm of our facilitating activities goes via our technical facility manager role as part of the Insure Resilience Investment Fund, different Insure Resilience name, where we work with the impact investor Blue Orchard, and ultimately we fund or invest into the insurance value chains within emerging markets. And the aim of that is to then use that investment to nudge the broker, data provider, insurer to adopt or increase climate insurance coverages for the low-income segments of the population. And very frequently that has been within agriculture insurance. So that's been the primary line of business for the fund as well. And ultimately the technical assistance aims to complement that investment and to provide expert consultants to the investee to support them in that activity. And here an example again, referencing to Agrotosha's Risk Shield has supported Royal Exchange General Insurance Company Nigeria as they have been developing the weather index insurance products. That'll be all.
Thank you, Gian. Just to update my understanding, is Celsius Pro, or was Celsius Pro also providing data, like weather index data, or is your services mainly advisory services that you provide?
Also within our company, we have both. So we have the tech side, which is the data and the platform, and we have our traditional consulting services, where we try to work on insurance market development. I'm in the consulting team, but of course work closely with my colleagues on the tech side, where we source especially satellite data. So we have all the major data providers globally, and we consolidate that, and that helps us structure the products or provide the data to our clients.
Thank you so much, Gian. Agrotosh, I was trying to ignore you altogether, but as people keep on pointing out to you, I feel like I have to talk to you eventually. So you're the founder and manager of Risk Shields based in Zambia, but I believe you work across the continent, if not the globe, and have been working with many of the schemes that have been discussed in this and previous sessions, isn't it?
Yeah, exactly. So basically, so I'm an actuary by profession, and as Risk Shield, we are essentially a technical service provider as well as a consultancy firm. So we do a kind of a mixture of both consultancy work as well as more of service provision work. I'll explain a little bit more about that. But essentially what we've been doing over the years is, yes, as you mentioned, we've done a lot of work related to agriculture and index-based products, including weather index, yield index, other types of indices as well. We've also done some work, not a huge amount, but some work in other types of microinsurance products as well, so typical life and health products as well. And a lot of that work has been in Africa, of course, and also some work in Asia and more recently in Australasia as well. So in Africa, a lot of the products we have done cumulatively, they've actually insured in excess of or around 5 million farmers over the years. Of course, this includes some of the large national schemes like the FSD scheme in Zambia. It insures about 1 million farmers every year, so we've been involved in that for a few years. And indeed, we were the people who started that product about 6 years ago. But outside of government, we've also we've been working a lot with private sector as well. So essentially our work kind of breaks down into areas of technical assistance, actuarial expertise, and other areas of technical support. Then in addition, we also do a lot of feasibility studies, diagnostics. We've done studies in countries like Mozambique, in Nigeria, and so on. And then we also do a lot of capacity building and trainings, because at the end of the day, agriculture insurance is it's a subject that requires expertise and active participation, not just from the insurance companies and the end users, but many other stakeholders in between, from different entities in government as well and distribution channels as well. So we do a lot of capacity building and trainings. Some of this is also at the field level. So we also do quite a bit of farmer level awareness and trainings as well as and when required. And finally, the operational areas. So I think probably the bulk of or a huge part of the work that we do is on the operational side. It's quite labor intensive, not very exciting always in work, but it needs to be done. Things like figuring out how the premium can be paid, how the claims can be paid, the processes, the policy documentations, the reinsurance treaties. So we get involved in all of those areas as well. Yeah.
Fantastic. Thank you so much, Agrotosh. And with that, I think we set the scene for the remainder of the discussion. Again, just a call for all of the participants here. Do put in your questions in the Q&A, and we have a look at those, and I will integrate them in the conversation as we go along. So obviously, as you pointed out, Agrotosh, and it's clear for everyone here on the call that agriculture insurance is quite a challenging endeavor. It comes to a lot of technicalities already with setting up, like how do you measure the, like if there is an incident index and what have you. So all of the support that your organizations are providing is vital indeed to make it happen, going from the facilitation, the bringing together the different parties, over to the education, the promotion, and the technical assistance, all the way to providing the actual data and actual services. So there's a huge array of things here to mention. Now, obviously, in the previous excellent sessions, already a lot of the lessons learned have been shared. So I don't want us to repeat the same things that have been there before. And I'm going a little bit off script here as well, but I would like to have a little bit of a tour of us, and I would like you to mention very briefly two of the things that you find that in your work you have been really proud of, the things that you say when it comes to lessons learned. These are the two things that I really think that are great, and I would like to talk an entire session about that if need be, and maybe one of the challenges that you have, that you say, we as an enabler, this is still for us something that we are trying to figure out how to make it work, or what we see in agriculture insurance at large. This is one of the challenges. So two of the lessons, the good lessons, the things that you say, this is something that we learned, and we want to promote that others take up, or that we think that we really have been able to make a difference. And one of the challenges that you face, or that you see that agriculture insurance schemes face. So let's go the other way around. So Agrotosh, I'm not sure if you are confident to go first. But either way, keep it brief, just point your points and then we can have a discussion around those.
Sure. Okay. So two things I'm really proud of on things that I see it's working well. I would talk about on the private sector side, because I think there's a lot of interesting things that we should be proud of on the public sector side, but maybe we talk about that a bit later on.
Yes,
on
please.
The private sector, sure. On the private sector side, I see. So there are quite a few cases where agriculture insurance has been quite successfully, I would say, integrated with agriculture financing. Yeah, and I've seen quite a few cases where we've seen, because of this integration, farmers end up having better access to credit. So let me give you some real examples that theorizing. So in Zambia, some of the district farmer associations, they have used insurance over the years, and even one of the farmer unions have used it over the years as a way of accessing finance. So they used it as a form of soft collateral or alternative to collateral. Now that's something that doesn't always apply, and it also depends a lot on how the banks and MFIs treat it and all that. But in many cases, there are some cases where we've seen that happen. We work with some of the MFIs, like Vision Fund, Agora Microfinance, One Acre Fund, and others, where they have essentially done the same thing more from the banking perspective, and that enables them to even access finance in order to lend out to small-scale farmers. So I think that's something that's really meaningful. The other one is, I would say, integration of again insurance with agriculture insurance in contract farming value chains. So I think Zambia has also been a pioneer of this over the years, where, as was mentioned earlier, Douglas mentioned with the experiences with LDC that that companies changed name 3 times in the time that they've launched, from when they started index insurance to where they are now. So that just shows you how long that scheme has continued over the last 8 years now. Of course, it has various challenges and problems, but still there's a continuity of it. And in that, we see that especially in some parts of the country where droughts occur quite frequently, farmers actually have an appetite to take up the product even on a voluntary standalone basis without requiring any bundling as such. So I think those are the 2 examples I would cite. But of course, it's not without its challenges on the distribution side. So I would say that overall, the biggest challenge is finding a proactive distribution channel who would actually be willing to, put the money on the table as it is, both financially and non-financially, in terms of supporting such products. So even if it's allocating, if enabling access to the insurance companies to the farmers, or potentially pre-financing the premiums. And I think that is also a big challenge as to the premium payments. In other words, I'm not talking about subsidies per se, but even if the premium is to be paid on behalf of the farmers and recovered afterwards by, say, a private sector aggregator, what would be their incentive for doing so? There needs to be a strong business case for them to be doing so. So I think that's generally a big challenge. We see that a lot of the contract farming companies are not willing to engage in that process. So for every LDC, there must be over 10 companies who refuse to participate in such a scheme. Yeah.
Cool. Thank you so much, Agurtosh. Clear and concise. The integration with finance, microfinance, microcredits, and then the contract farming. Intriguing indeed. Are some of the things that you think that are some of the lessons that you hold dear, and then the challenges with the distribution channels are on the challenges side. Gian, what would you like to add there? If you want to second one of these, please go ahead.
Otherwise, Agurtosh took away 2 of my examples already.
That's great. Then they get 2 votes. So that's what we're here for, to see what really comes to the surface.
So I think that ability to bundle insurance with financial products really has that scalability potential. So I think then you can really address a need that the farmers have. I think the uptake is much stronger if you can integrate it with a product or a service that they already need or already looking for. Maybe on the value chain of needs, insurance tends to come a bit later when thinking of the financial products, and bundling really can overcome that kind of hurdle. As well as on the challenge side, on the distribution, I think that incentive, if there is a misaligned incentive with the distribution partners, which are absolutely key, then it becomes very difficult. but just to add something new. So I think on the something that works from our perspective, of course, is by digitalizing the process, and I think we did hear that a few times this morning as a key factor. I think that really can cut down the paperwork and the Excel lists and just help the insurer or the scheme monitor the product better. When is it triggered? Where should it be paid? How are we onboarding people? I just think that adds a lot of efficiency gains. And since administration costs do end up making up maybe 40-50% of the insurance premium, you can cut down quite a bit on the cost there if you have an efficient digital process in place. I think on the challenge side, maybe I would want to add, if there is not a sufficient buy-in amongst the stakeholders or all government levels, that's where we see challenges coming. So maybe you could have a very enthusiastic ministry, but the regulator is not quite on board. You'll still run into a lot of issues. So kind of the multi-level government buy-in, I think that's a key point. If the government is aligned on that, things can move really quickly. If not, that tends to be a challenge.
Cool. I like those as well. Just to make sure I got it right, you said that 40% of the premium is going to distribution, right?
Well, I mean, that's now an estimation from my side. I think the insurers would have to supplement that, but I think usually the risk premium would be maybe 40 to 60%, and the rest of it is margin plus distribution administration cost. And I'm not saying a digital platform can reduce that to zero, but it can take some of that off it and make it just to that 10-15% cheaper maybe. Right?
Yeah, makes sense indeed. All right, Douglas, what are your lessons you would like to share? So the positives and one of the challenges.
All right, thank you once again. I think like you put it across, I'll share two challenges and two things that I'm happy about as a facilitator under GIZ. So one thing that I would look at that I'm happy about is that I think our vigorous campaign in terms of education of farmers on agriculture insurance has been very key, and I think we've made success in the years that we've engaged our various stakeholders. And this has actually moved from conducting trainings for microfinancing institutions, the banks, the aggregators themselves, and we've seen the numbers of these partners getting involved in the trainings and not shying away. Every time we call for a meeting, we involve them, do plan together, and we do that. And we see the need, and of late, we've received enormous letters, asking us to kind of support them in terms of trainings, everything to do with logistics in terms of training. So this has kind of actually made us quite happy, and also to get an invitation from the government is not an easy thing for them to ask you to kind of also help them with such in terms of building education on weather index insurance and also index-based livestock insurance. So this part, I think we're quite happy with this one. And then the other thing that we've learned and that we've seen that is key is actually working with aggregators as a distribution channel, because with weather index insurance, it's not something that you can sell to an individual farmer. It becomes costly for an insurance company themselves, and also for the individual farmer who doesn't have that capacity to pay a premium. I think going through the route of aggregator, I think it's a good way. And under the aggregators, we've worked with contract farming, seed companies as distribution channels. So these are the things I would say that have made a lot of sense and made us happy. With a scheme like under LDC, I think at some point, the very first time we tried it, I think they had like 3,000 smallholder farmers registered for insurance. But when we bundled that product with a life component, we saw the numbers shoot to 70,000. And these are numbers that voluntary farmers decide on their own to do, which I think also creates sustainability, because it's a farmer who decides to say, look, I will take up insurance. And like the way it is that you embed a component of insurance, it's compulsory. You want a loan, you take up insurance. I think sustainability there gets affected. So these are the two things I would say that I'm happy about. And then the challenges that we've basically seen working on the space of weather index insurance and these other agricultural products is on the supply challenges. This is how I'll just kind of distribute them. On the supply challenges, I look at the technical expertise of the insurers. There are very few. At the moment, I think there's one big insurance company, which is Mayfair, which I mentioned. They have the technical capacity done. And then the other 5 are also coming in slowly into the game. We've seen them go more on the FSD, which is a government program where subsidies are actually, premiums are actually subsidized. But slowly we've seen companies such as Professional Insurance, Madison Insurance also go, for the private sector, which is, I think, something that we've seen that is working on. And then when you look at the customers, these are mainly smallholder farmers in informal sector. So this also poses a challenge to the supply side because the understanding of the product is limited, and hence it requires a lot of awareness curation. And then distribution channels to reach the farmers is also quite challenging. We might produce all these training materials we're talking about, but do they get to reach the other smallholder farmers? That we're not sure, because we might, as GRZ, we might reach a certain level and say, here are the training materials, but do these people who've given these training materials take them to the other smallholder farmers? So these are the things, are the challenge that I think I've seen. And also to overcome this challenge, we've also come up with a mobile solution, a mobile platform where our smallholder farmers dial a certain number and listen to voice prompts that talk about weather index insurance. And then at the end of the month, we're able to get a dashboard. It gives us what were the frequent asked questions, so that the next time we are coming up with another training program, we actually look at what were the farmers not clear with. So this is how we've tried to address those challenges there. And then the other challenge on the demand challenges, I think this one has been on affordability. It's not easy for our smallholder farmers to afford the premium. And 3/4 of the time, the aggregators are actually pre-financing the premium for the smallholder farmers. But this also poses a challenge for the intermediary because it increases now their portfolio, in terms of how much they have to give out. So you find year in, year out, the numbers are also going down because they're also saying, look, we cannot afford to pre-finance for our smallholder farmers. So that's another challenge that we see. And then low insurance literacy also, and then also trust on the product due to basis risk has also become, a challenge. So this is something that we need to work together, look at it, and also look at the value position for this. So I think these are the two things that I could share with the team. Thank you.
Makes sense, and indeed affordability is definitely one of the key concerns for agriculture insurance if you look at it from a broader lens. And I think if you would have asked the same question in the practitioners group, sustainability for them is definitely also on the horizon. Just one question, Douglas. On the upsides, you mentioned your work with the aggregators. These are purely private schemes, or is this also where government is involved in?
No, they are private schemes.
Okay, thanks. All right, Marwa, what are your 2 cents? And then maybe, to be fair, your CEO already shared some of the lessons learned, so that makes it both more interesting and challenging. So let me point out what she gave in the opening remarks as some of the lessons that she got from agriculture insurance in Zambia. There were 5. One was to facilitate private sector involvement, where customer centricity is crucial, open up for competition, that is actually leading some further innovation, to leave the private sector to manage the technical aspects like premium, claims, collection, client education, and the use of technology. We heard 5 lessons so far, so it's kind of daring to have to add to that, but please be my guest.
So can I just agree to that?
Sure, go ahead. That's the safest bet, of course. Is there anything else that you would like to, that you've seen that you would like to add or you would like to comment on?
Okay, so I think there've been great successes in the agri space in Zambia. The fact that we have managed to support different agriculture insurance products and feasibility study is a success itself. I think what I can add on is the demonstration is very important. I know there's been a mention of different insurance companies that have come in now on the public-private partnership weather index insurance product. And that's because there's been some form of crowding in because there was demonstration from one insurance company and different stakeholders. So I think as FSD Zambia and other market facilitators, I think one success that has been there is being able to demonstrate that agriculture insurance is feasible and it can be sustainable. And because of that, we've been able to see some crowding in from different insurance companies, and not only different insurance companies, but even different development organizations trying to support the same cause. So yeah, I think that's been one of our successes. Some challenges, I think the challenges have already been talked about. Distribution challenges. I think that is one of the reasons why we've been trying to see what other schemes we can come up with. Some of them, some of this has come up as a result of the challenges that were faced also at the start of the private-public partnership of the weather index insurance. The challenges of pricing, if that wasn't done quite correctly, how can we do it now? And I know you're talking about the challenges of expensive premiums. How can we then help facilitate for this? And I think in my first mention, I did mention the proposal of smart subsidies and graduating the subsidies until the smallholder farmers are able to sustain the premium. So this is something that we are trying to do right now under the Inclusive Crop Insurance Scheme, where we are supporting together with MUSICA a smart subsidy, a graduating smart subsidy for 4 years until we're very sure that smallholder farmers are able to sustain the premium, knowing that the premium is expensive for agriculture insurance. So some of our challenges have been a lesson for us to try and come up with different and improved agriculture insurance schemes. And I think that's about what I can say about that.
Well, thank you so much. I do agree on the demonstration effect very vividly. Obviously, there's a lot of learning around, right? Organizations who are watching the space, who are exploring their options, and as such, if you have successful programs, that helps. Can you explain a little bit how this graduating of the subsidy is going? Is the idea that the premium will go down over time as insurers gain more experience and as such can better price? Or is the expectation that farmers will be in a better position to pay the full premium over time as they have less losses and as such can save for the premium?
I think it's both ends, both from the supply side and the demand side. But more so, I think from the demand side, knowing that the premium is expensive, and also that it's still a new concept to the smallholder farmers. So for them for you to introduce something to them which is new and pricey, I think it can get a backslash. So trying to show them that it's something that is beneficial to them. By the time they see that it's beneficial, especially when they get a claim, they'll be able to, and if you up the premium the following year and the following year, they'll be able to appreciate it a little bit better. So that's really on the demand side, somehow getting them to appreciate the product in a two-way prong, where you're talking about educating them and also making them sustain it on their own and able to buy the product on their own. So we believe that introducing a very expensive product to them may not be taken on by most smallholder farmers, but kind of like helping them. In the past, yes, some subsidies have not really had a sustainability approach, but in terms of sustainability, we know that FSD Zambia might not be here forever, and other developmental organizations. So a gradual kind of smart subsidy is something that we proposed for.
Cool.
Yeah.
Got it. And is that for now just an assumption, or do you see that also working out as such in practice?
I think it's not an assumption. It's something that should be taken on by many other organizations, and I'm sure it will be something that maybe we'll showcase at the end of 4 years if it works. And I'm sure we'll come back to you, Bert, to tell you about all the challenges and successes. But we are optimistic about it, especially
will that be in 2025, yeah. 4 years?
Yeah, but as I mentioned earlier, before we implement anything, we get down to what happened, what has happened in other schemes, what is happening in the market, and what can the smallholder farmers afford. And people like Agritosh, who are actuaries, they'll price it. Sorry, Agritosh. They'll price the product enough for the insurer, and also somehow, especially that he deals with microinsurance as well, try to facilitate for the smallholder farmers. But for something to be sustainable for both ends, it must also be accepted also on both ends. So
absolutely.
Subsidies, yeah. So this is something a challenge that we looked at, and we thought maybe this is the way to go. Yeah.
Well, it is being recorded here, so I'll put a reminder in my schedule in 4 years to have us revisit this call. So beyond looking how we aged over time, it will be also interesting to see what we learned more. So thanks, Mawa. All right, Agnes. The challenge of coming last is to come with something new. You don't have to, because that would help my role to kind of to summarize this in a bit. So if you would just like to second some of the things that have been said, that would be perfect. But if you have other ideas or insight lessons that you would like to add, please feel free.
Thank you, Beth. Yes, it's not easy coming last indeed. I see most of my challenges, success has been covered, but that's a good thing. It's good to say we are all in this together and we are facing similar issues. I would like, in terms of what worked, I picked on something Jayan mentioned as a challenge. So for us, actually, in our cases, I would say is a success. What we really see as a key success for us is having the government on board was really key driver to our achievement. And we went, this goes beyond the 40% subsidy of the premium from the government, which addresses that issue again of affordability, especially at the start of the scheme. But what I wanted to share is really what we learned about conducting client education through government structures, whereby it's local government leaders, public-based agronomists, farmers, cooperative. It was very crucial in building the farmers' trust and understanding the importance of insurance. So although most farmers in Rwanda, because of our Mutuelle de Santé, they are familiar with insurance, that are public insurance. They are not familiar with private insurance. So it was really crucial to have to use a channel for education, a channel they trust. And that really, we thought, for us, we thought that was one of the key, really success, which was not covered by the rest of the team. And I would like to echo what Maua said, as similar to FSD Zambia. It's really rewarding to take the leap, and then you see you are able to demonstrate the value of inclusive agriculture insurance to both the farmers and even the private sector. I have seen some of our participating insurers on a call. When we started, for example, we have 3 insurers, but really that's by that demonstration effect, now 2 more insurers have joined. So that's also something I think is quite a good success to share.
All right. And you have challenges as well, Agnes, or all is fine in Rwanda?
Of course, there are always challenges, but it seems listening to whether it's a previous session, even this session, it seems again like we are sharing the same kind of challenges. But what really, I think, maybe talk about data, we talk about even the awareness, the trust, although especially the trust in Insure, you have to build that gradually. And in in Nai's case, we found that, again, I commend the insurance companies, they really used claim settlement as a tool to build trust as well. So that was a good way to address that challenge.
Thank you so much, Agnes. And indeed, it's great to hear you referring to similar points. Those have been out there already before, but it's good that you have stressed them once again. What are some of the challenges with distribution, with getting the partners together, having the buy-in of them? How do you incentivize them? And then obviously all the way to bringing it to the client in a digital way or not. What about education and affordability? All of these things do play out, and recognizing that you see them as well in your work. We touched upon subsidies, and that brings us to the broader challenge, obviously, of sustainability. I want to talk a bit about that, but before I do so, I want to zoom out a little bit and have your thoughts about the different models that exist. And if I may, I believe that what we have been discussing in this panel, but also in the previous ones, is that I see three kind of dominant models that exist. The one is bundled, which is a purely private endeavor, which would be the bag of seeds, or with a loan comes an insurance. So you bundle the insurance with it. So it's a private between insurer and the intermediary, distribution partner, the aggregator, and that's how it works. So that's one. And then you have PPP models, where I believe today we discussed two different parts of it. The one is the consortium approach, which is what is happening in Kenya and Rwanda, where there is a consortium of insurers that works together in partnership with the government to bring the insurance to the farmers. But then also, interestingly, in Zambia there exists another model, if I got it right, which is a more competitive model, where there is a bit where insurers need to compete. This is at least if I understood it correctly from both Betty's and then Humphrey's talk this morning. So I'm wondering if you were to select and have to choose or to bet on a project, and these were all options on the table, what would be your preference and why? Whoever wants to go first, and then we can take it from there.
I'm happy to go first, but I don't maybe my. Yes, I think I know how much you are a great believer in customer centricity. I also think this is a country, you have to be country centric, if I can maybe return it to you. So I'm not going to say there is one size fits all. So, but I think in our case in Rwanda, we really believe that PPP model is the way to go. So, and that's why, really backed by a strong feasibility study, and also learning from some of the earlier pilots. That's why we think that it may not maybe work elsewhere, but that's why I'm not quite keen to to answer the question directly as you asked. And what I see as some of the key for us ingredient for that PPP to work, and again also highlight maybe why that really works for our country. I see one of the key ingredients is really having a trusted and progressive government which is backing that initiative. And we are very fortunate in Rwanda to have such government. And this really played a tremendous part in the success of NAIS so far. Also having insurers strong buy-in and building that gradually, that crowding in, I also mentioned, I think that are done. And if you spring on capacity building, strong awareness, and you have that strong foundation to continue using, bringing everybody together and reach scale and sustainability. So that's for our case in Rwanda. So I will go for a PPP model.
Yeah, PPP. And in that model, you have a consortium of insurers working together, yes. Right? Mm-hmm. Okay. Mm-hmm. And the condition that you are making here is you need to have a strong and trusted government, which, yes, as you rightly point out, is not a given in several other markets.
Indeed, we are very privileged. So that's the key ingredient. Thank you, Ben.
All right. Who else dares to speak out on this point on the preferences? John?
Well, yeah. I mean, I think the bundled works if you're looking at a very specific sector. So let's say if you're not trying to do a national rollout, let's say using the Nigeria example, is the government wants its own lending schemes to the smallholders backed by insurance, and then that works for that specific segment, or if you focus on input suppliers, then you're really addressing a specific segment. I think PPP works much better if you're trying to really roll it out nationally and you're wanting to do it on a broader in a broader sense. I think then it's inevitable to involve the government, and I think that cooperation between the private and public can be very strong. And just to add, there is another model, which is no private sector, right? So national insurance companies that run the show, or the government essentially acting as a massive aggregator and essentially doing drought relief or direct support for the farmers. So let's not forget that technically that is also another model that a country could take.
Which you would like to second, or not so much?
Well, I think the subsidies question is a really interesting one. I don't have an answer to it yet. I think there's a lot of controversy around whether it's, is it sustainable or not? Would it be better for the government to channel that money directly to farmers or not? I'm sure there's quite a few opinions on that one. I don't think it makes too much sense to have a pure state-led model. But just to point out, I think some countries do have a stronger sense that the government should lead the agriculture sector because it's of national interest.
Cool, but thank you for hijacking the options I gave, so that's cool. But with that, John, I'm also wondering, if you go with a bundled model, what is the value proposition that you can give to farmers? Is it comparable to PPP models? I mean, is it to put it more bluntly, is the claims that you can pay, is it as generous as in a PPP model? Or is it just the bag of seeds or the loan, and as such it compares not as what you would receive in another kind of scheme?
I mean, I think it's almost partially admitting that it's easier to not educate and inform the smallholder farmer about everything, right? I mean, let's be honest, and you say, okay, let's save this kind of layer of education, which we would have to do if you want to sell a product to somebody. They need to understand it, and that's a lot of effort, that's a lot of work. So let's move it one level higher. Let's go meso. Let's explain the product to an aggregator or to an input supplier, and that's more efficient and will still result in a more resilient agriculture sector, right? Now, I don't know if that is necessarily what a government would want. Maybe governments would want to say, look, this is important. We want to make sure all our smallholder farmers understand that. Then maybe going bundled is a bit more challenging because it takes away that need to educate the smallholder farmer to some extent.
Gotcha. Agotosh.
Yeah, so I have I think I have a slightly different take to it in the sense of the options you mentioned, because I think the bundling is something which can happen within PPPs or on a purely private sector driven market as well. So like in Uganda, for example, there's this very well functioning PPP model on the Uganda Agriculture Insurance Scheme, and a lot of the distribution there, in fact, most of the farmers they reach is through bundling with finance. So you can have bundling within PPPs. The other thing I wanted to clarify is, it depends on what we mean by PPPs here, because if we're talking about countries with agriculture insurance consortiums, like in the case in Rwanda, or also the example you mentioned in Kenya, Uganda, that's the case in many countries actually. Malawi also had such a system in the past, well, it still does. But personally, I'm quite skeptical about having agriculture insurance consortiums per se. They're not a bad thing. I mean, they have a lot of advantages, but I'm skeptical of it from what I've seen in practice for various reasons. I could talk about this for hours, but in 1 minute, one big issue is that I generally see that it tends to slow down the kind of innovations that insurance companies would do because they're in the consortium. So remember, as an insurance company, especially when it comes to agriculture insurance for small-scale farmers, they are generally not so enthused to come up with spend a lot of time or money to come up with new innovative solutions. Moreover, if they're in a consortium, they generally tend to sit back and, let the consortium do its work, as it were. And, in countries, I think this is the one reason why in Zambia you've seen so much that there's been so much innovation over the years, because we don't have a consortium, which I think is a good thing from that perspective. The other issue is even more serious, I think, to do with premium subsidies. So in some countries, including in Kenya for that matter, and many countries, like Nigeria is a good example, because they had a lot of the times these premium subsidies. I do believe the premium subsidies are very, very important, and they, I personally think they should be there for small scale farmers, definitely, same way they are in Europe or Asia. But it's the problem is if they are in a consortium and they are only eligible to the members of the consortium, you essentially end up creating a cartel. Yeah, and that's kind of what's happened in many countries where other insurance companies are not able to compete or enter the market because the consortium is able to offer a product at half the price, so it's not worth them trying to, of other insurers to come in. So I think these are some of the reasons. There's a few other reasons, but these are some of the reasons why I think it should be left to it should not be a consortium per se, unless the consortium is managed very, very well, where it doesn't end up creating a barrier for those insurers who are not part of the consortium.
Clear. Yeah, indeed. You're seeing in some countries where such a consortium led a bit to a standstill because individual insurers were not allowed to really act on this because they were part of the consortium. But then, indeed, if the consortium works well, then it could move things. Let's see, Mawa. What's your stake on or stand on this? When you look at the PPP models, consortium or not, if I'm right, in Zambia, some insurers, they pool together, maybe not as a de facto consortium, but they've pooled together in the bid, isn't it?
Yes, you are right. They have pooled together. So my answer to you would be, I think both would be great, bundling and a PPP. It just depends on how you're looking at it. And I think Jean was right to say, on a PPP, it's a little bit easier in terms of scale. So you get the smallholder farmers quicker, you get the numbers faster because the government is there. And if there is buy-in, like in Rwanda, and yes, there has been buy-in in Zambia, yes, you get your product out there a little bit quicker. The only challenge comes in, especially in different African countries, if there's no buy-in from government, or if there's a change in government, or there's all the political challenges, there's a change in the agriculture minister, and he doesn't believe in your agriculture insurance. And so in terms of sustainability, it's a little bit edgy on that, in that aspect. In terms of bundling, I do agree it's really smaller. I think we've done that. We've supported some bundled products which are targeted to some seed companies that have embedded insurance there. So if, for example, the seed company does see that they're getting some more business because of the insurance, then sustainability is easier in that sense. So both of them are fine. I think the bundling is more innovative. The PPP, you get your numbers quicker. You get a little bit lazier as you go on. Right at the beginning, it's fine. But then as the years go by, I do agree, it becomes a little bit less innovative around it. Yeah.
All right.
So yes, both. In terms, it really depends. If you're looking at it in terms of scale, getting the farmers faster, a PPP is good, but it does have its challenges.
Yeah, and where I would assume or that also subsidies could put a bit laziness in the scheme, as you have subsidies, unless you go for the model as you have shared it, Mawa, where you graduate your subsidies. And I think that Enoch Singo just shared a great addition to that as well in the chat is how the projects are structural anchored. If it is run as a standalone project and program, like the longer sustainability might be challenging, but it is as a result of something that is embedded in the law, especially obviously when we're talking about public schemes, then you have a ground to keep it going. Okay, Douglas, we haven't heard from you. I'm not sure if you want to share your 2 cents on this subject as well.
Well, I think most of them were covered by Mo and AgroTouch, and then also I second what Enoch just shared in the chat, because I'm looking at like the practical experiences that we've done, where we've done private partnerships. So with this, we've been able to get numbers, like from picking up from what Mo also shared, we've seen numbers rise. We're able to get the numbers that we want on the private sector. And then also what we've seen is that it also brings in innovation, because you have to table all these issues. They'll give you feedback on how the product performed. One, it comes from could be the extension staff who probably would have questions for you, and then you go back to the aggregator and sit with management. So in that case now, it gives you a chance to kind of innovate, look at the product in a different way, because they'll tell you, look, in this area, this is what happened, and the farmers are not happy with such a payout. So you try to make it innovative. That way you find that numbers also increase. And I think, for example, if I look at a seed company, I think there was one that was done with a product that was done with Monsanto that they innovated, and it looked at germination. Yes, for Monsanto, it was more like a marketing tool where they said for the first 200 farmers to buy seed, it comes with insurance. So they did sell quite a number of seeds, but it's just that it had a maximum of 200 farmers. But in the later year, we saw these farmers kind of ask to say, how come this year we're not getting insurance on our product? So, but it's something that, because the premium was being subsidized, was being paid by Musika, and Musika was not going to pay that premium again. So this is how this one also kind of just, it just died. But I think it was a good product. When I saw it being done in Malawi by, I think, Pool Advisory, we saw a farmer who had lost out in the first 21 days. They had no rain. They did not receive rain when they planted, but their insurance product meant that if in 21 days you don't receive rain, you're given a new seed pack. This farmer still grew. They just changed the variety, of the maize seed that they needed to grow, and they were able to have a bumper harvest. So such a product also worked because there's a component of innovation, and after your crop has germinated, you now have the pure weather index to take care of the vegetative part of the crop before you harvest. So these are just my 2 cents that I could share with the team.
Thank you, Douglas. Great points by all of you. Obviously, I am disappointed in the end that we haven't come with one conclusion on what is the model to choose. But and even AgroTouch putting it all together, the bundled PPP. But I do agree on what you're saying, and I hear where you're coming from. It depends obviously on the circumstances where you are. If it is indeed coming, as Enoch suggested, from within the regulation, and what you want to achieve, that all plays out. But I also recognize that where there are some preferences for the reasons you cited, the competition leads to innovation as such, that there is not one model that you completely dismiss as not possible. That's interesting as well. And then the other point that I maybe wanted to ask, it's a bit daring, we have just a few more minutes left, but one of the things that stands out clearly from agriculture insurance is that it needs a long-term perspective. It is still new, there needs to be market education. Also from the insurance company, they need to understand this animal and this beast and how the pricing works. There is still a lot of new things going on. We go from index to area yield, and those things keep on refining. And then I'm wondering where you stand, and I'm particularly pointing to AFR, FSDZ, and GIZ, as you work as a catalyst in the markets you're working in, and that means you're always pushing the latest frontier, the newest, and the latest. And so how can you, on the one hand, create and sustain or come with new projects, but then also ensure that they can continue after your 3 or 4 year term comes to an end. So not to launch something that then is say later on not getting a new home or not a new sponsor. and maybe to another extent, it continues with government support, right? So if governments change, if there is new governments, and if I'm right, that's also one of the things that played out in Zambia at some point. It's always a point where we ask, will this continue in the same direction? Will it change? So I'm curious to get your thoughts and ideas on these questions on how an enabler can ensure that the longer term perspective is ensured upon your graduation out of the projects.
So I can go first. So I think I mentioned this earlier. Whenever we are facilitating any product on the market or any innovation on the market, when we bring different stakeholders together and at the point of support, especially financial support and even technical support, we have different strategies right at the beginning of who is doing whatever and who is financing for it right now and who will do and who will pay right afterwards. So there's always that strategy right at the beginning. So following that sense then, right at the beginning, we do engage private sector and make sure that they also support the same cause. So there should be some form of buy-in, both technically and financially. So we'll introduce the experts to them and we'll gradually, maybe right at the beginning, we will support the technical experts, but gradually come out from the support until we know that they're fine. Same as the financial support. So for example, if there's a 50% financial support on an agriculture insurance product and a 50% from the private insurer, we graduate it slowly until we're very sure that the insurer can sustain the product on their own. So when we get into the market, we do not believe that when we introduce something into the market, it should be something that should not be sustainable. So our sustainable approach is that the market should be able to contribute as well. And if we gradually pull out as a market facilitator, I think we believe that any product that we put in the market is sustainable enough. Yeah. So that could be one point, and I'm sure Agnes can put in another one.
Makes sense, Mawa, and it's indeed great to hear how you have that approach. Agnes, you exited from the projects already, right? That's what you said at the start. So
yes.
who took over the role that you had in that project to bring all of these parties together?
So our key implementing partner was the Ministry of Agriculture. And as Mau mentioned, really is the same approach we use, where at the beginning, when you are designing any project, you need to think ahead about the responsible and sustainable exit when a time comes. And what she was talking about, who pays now, who's going to pay later. And you make sure over the time, during the period you are supporting technically and financially, you are building that foundation, you are building capacity, whereby it is like we had, for example, a technical support unit, as I mentioned earlier, which was supporting technically and financially, but it was sitting at the Ministry of Agriculture, really almost like a future home. And now as we exit, actually the ministry have absorbed that team to continue the journey we started. So it's really a matter of making sure, knowing where you exit, what you exit should look like, the good time for you to exit, how it would look like, what that sustainable exit look like, and work towards that over that period. So similar as FSD, really Zambia, you will never exit after such investment in something you believe in unless is in safe hands and on the way to sustainability and scale.
Gian and Agrotosh, I'm sure that over a beer you have many more stories to share on this, but from your experiences on the ground, is there any recommendations that you can make on successful exits by market facilitator, catalysts, or even governments?
Yeah, so I think just very briefly, I think with the exit strategy is really important aspect, of course, because I think there's quite a few projects I've seen over the years where the exit strategy wasn't even there, or it wasn't very well thought out. I mean, of course, within that, there's different sides to it. There's the technical capacity that the insurers or whoever's providing the insurance, whether they have it or not. There's the data, there's the awareness among farmers and all of that. And then there's also the premium financing of it. So I would say maybe one thing not to do is like there are some projects even around now where, let's say, the donor is fully funding the premium without private sector involvement, without government involvement even, or farmer involvement on financing the premium. So those are the schemes where even if there's a lot of awareness raising done and all of the other areas of support are provided, but if the exit is done without an alternative in place as to how the premium can be paid, by the farmer or anybody else, then those are the schemes where we've seen the schemes kind of collapse very spectacularly. There have been some cases like that where the donor stops the funding of the premium, and then no one is insured anymore. And so I think it's really important in the exit strategy to figure out, I mean, of course, all of these other areas, but also the premium financing, that who and how will pay the premium, and to develop that over a few years before the exit is done. Yeah.
Maybe less on the premium or on the exit strategy to add from my side. I think everybody covered that very well, but just one angle that I guess is often overlooked within insurance schemes is the power that the reinsurers hold. So who ultimately provides the capacity at the end of the day. So whenever when it comes to how much does an agriculture insurance policy cost, I guess it depends on the country, but ultimately the national reinsurer or international reinsurers tend to play a considerable role in determining the price of the risk. And I think getting them on board when exiting a larger scheme makes a lot of sense. Have them bought into it, make sure the reinsurers might provide some flexibility as well. So I think they're an important player within the value chain, which is they're hidden at the back, but not to underestimate their importance.
Fantastic, and I believe with that, Gian, you've given a great pointer for the sequel of this conference, to have a roundtable with reinsurers to see how they can really play a role in this, because indeed this is one of the many areas where we can and should zoom deeper into. With that, I see that we are actually already at the end of our allocated time, and as a next session is the closing session is starting hereafter. We'll stick to this, but I do want to thank you so much for having shared so many insights on both how the different models, bundled versus PPP, or the combination, or the P without the PP, which is then just the public, how they all compare and play out, and how circumstances play a role, and indeed to learn from you what are some of the strengths and some of the challenges around the bundling, the integration with finance, with contract farming. Again, one of the areas I'm keen to learn more about. The distribution channels and challenges. How do you incentivize partners? How do you bring in the digitization, which can reduce a lot of the costs, and ensuring that there is a buy-in and organizations are in there for the good reasons. And when it comes to the farmers itself, how do they pay the premium, making sure that they get educated, and that obviously it is both affordable and also receive value in return. So we covered a lot of ground, and yet there's so much follow-up discussion that we should be having. So I'm taking note of that we definitely do that next time we meet in person. I do want to thank you so much for sharing your insights and time with us this afternoon, Gian, Agritosh, Agnes, Mawa, and Douglas. Keep up the great work, and keep on inspiring us on how to improve agriculture insurance for inclusive farmers across emerging markets. Thank you so much.
Thank you.
And with that, I would like to give the floor and the mic to Lami, who has done a fantastic job in putting this program together with FSD Zambia Tech, and the sponsors for the closing remarks of this conference.
Thanks, Beth. Very engaging session, and I like the flow. I like the content. I like the insights that are coming, the wish list in terms of the facilitators, what they want to see before they even consider the exit strategy. My role now is very simple. It's just to summarize some of the key takeaways that we have in this seminar. And gratitude, of course, to Access to Finance Rwanda, TAG, Microinsurance Association, Microinsurance Network, FSD Zambia, and the MunichRe Foundation, and of course, FinProbity for organizing this session. So the wrap up, I'll begin by just trying to summarize some of the things. It's always very difficult to summarize a wonderful session like this in very few words, but I'll just begin to just highlight some of the key takeaways. So in the opening session, I think we started from the blue ocean, and the blue ocean is the over 70%, 90%, 80% of people that reside in the rural economy, which is the blue ocean really, and of course the need to help them manage risks arise from climate change, which was well dealt with in the keynote presentation, that it's here and it's changing patterns. We saw from the videos that farmers, cannot even tell, how long a rainy season would last. So I think that is with us. So that's the need. At the very beginning, we established that customer centricity is still critical. If we are designing products that will change or improve the lives of smallholder farmers, we need to understand their perspective, we need to understand their needs, we need to understand their cash flows, we need to align the product development around their needs and also their cash flows. Technology emerged at the very beginning in the opening session as an enabler, particularly to smoothen the value chain functionality when it comes to inclusive insurance. I think this was highly highlighted from premium collection or from claims management as well. I think within the opening, there was also a mention of being gender smart, and I think trying to ensure that even as you design products, you do not leave out the unique differences that might be there between men and women, and also some cultural factors. I think as we have seen in the rural areas, sometimes women can be disadvantaged. So I think it is important that we look at the gender smart dimension of designing inclusive agriculture schemes. Partnerships, I think, again, emerged in the opening session as very, very critical in terms of both the design and management of agriculture schemes, whether it be private sector, then it will be partnerships between insurance companies and various distribution channels, agro dealers, seed companies and so on. But then, of course, we also established at the very beginning that the partnership with the government is very, very critical when it comes to agriculture insurance. When we moved to the practitioners roundtable, a number of themes came out there. I think there were issues around product design, the issues of bundling, data, pricing, cost consideration, and business risk as well. I think business risk was highlighted. I think the issue there again is, I think there was an emphasis to say, do not really exaggerate things. And sometimes even traditional insurance is overpriced. And if we have to really look at, I think Israel's message was, be real when it comes to really setting up these things. Sometimes we exaggerate, and when we are looking at agriculture insurance, we really have to look at those costs. But of course, bundling and embedding is really one natural strategy for most insurers, because then they can leverage input provision, they can leverage credits that goes to smallholder farmers. Client education came out. We learned how Holland is leveraging, storytelling, traditional storytelling, in terms of really trying to educate the farmers. But also one of the aspects that was highlighted there is that really client education is about building trust. So I think living up to the expectations of what is promised in the products is very, very critical in terms of really getting farmers to see that there are payouts. And it was nice to actually see the practitioners highlighting that the moment of truth is really when you're trying to make those payouts. Of course, that without saying that it led to the next bit where, there was quite some debate around profitability and client value. How do you balance that? And we saw the differences between small scale. When you have small scale, the likelihood is that your loss ratios will always be over the roof. But the more you transition and have more people, then you get profitability. But at the same time, scale comes with the need of technology, being able to manage that. APA Insurance highlighted some of the challenges they have, where they have to do some manual, analysis of data, and I think it's important that, information technology solutions can be employed as you increase scale. Tax exemption subsidies came out very strongly as recommendations from the wish list when the practitioners were looking at what they would want to see. And of course, in some countries, we've seen it happening. I mean, in Rwanda, they made those exceptions for agriculture. And of course, we've seen in other markets also that there is consideration for any class of business considered as inclusive insurance. So I think there is still a case there. And this, I think, are two dimensions. Because on one hand, when you talk about subsidies, what you want is to make insurance affordable. But then the other option, of course, will be tax exemptions, because they both would have the same impact on the premiums as well. The final bit takeaway from the practitioners roundtable, which I liked very much, is the debate or talk around the institutional buy-in. I think we learned that really insurers should really treat this not only as a blue ocean, but I think a case in point to give back to the community. But of course, we know that ultimately you will be able to be profitable with scale. But I think at the very beginning, in the boardroom, the discussion should be really around how can we also give back to the community. So have a long-term perspective. Don't be impatient, but keep pushing the frontiers until we get to profitability. But I think what will sustain the engagement, I think we saw it, I think passion, and we've seen it from the CEOs who have had passion to say, look, I need to make a difference in the lives of farmers, and they'll keep pushing that. So I think these are some of the key takeaways from the practitioners' table. And finally, of course, it's very hard to summarize a session that has just gone by. And I think Beth already did very well, towards the end to get some key takeaways from the panelists. But I think what I saw as key takeaways, I think the issue of coordination is very, very important. We've seen sometimes that even development agencies do not invest enough time to say, oh, what are you doing? What have you done? How can we add value to what you have done? How can we together, map out an exit strategy? How can we use our resources much, much more to create more impact? And I think we've seen, it's good that we saw that GIZ, FSD Zambia are already doing that in Zambia, trying to, really work together, for a common goal and leverage, their individual organizational funding streams to add value to agriculture insurance. And then, of course, the issue of sustainability, I think, was talked about and also related to exit strategy. At which point should these players really say, fine, now we can leave this sector, we will not support private sector or public sector. This And I think one of the points highlighted, I think Beth did highlight that really we're at really the start of this. I think I showed some figures in the practitioner session. When you look at agriculture, it's still 1%, 5%, 12% at the highest in some of the markets in terms of inclusive insurance. So it's really at the very end. And most of the markets are not even yet looking at the 1 million mark. So I think we are really at the start. So the role of development agencies or facilitators is still highly critical. I enjoyed the debate on consortiums, competition and innovation. And I think it's good for the first time. I think people were frank about, the pros and cons of these strategies. I think one thing which was overriding it sometimes is depending on the model that you take, you have a potential prospect of damaging the future of the sector. So I think it's really important to be very careful to make sure that there's competition enough to spur client value, and the innovation can also not be affected by the fact that some people or some actors have an advantage over others and then they become complacent. So I think that debate was very healthy, and I know this might be the start of really looking at this debate, knowing that we know these models are existing in different markets. And finally, the business case of smart subsidies. I think this is without say that everyone establishes that really because of the blue ocean, the rural economy, climate change, and the complexity of agriculture insurance, we still need to have that business case of smart subsidies. And of course, with time, it can decline. And with time, trust will be built enough, client value will be built, farmers will, production would increase, they'll be able to afford premiums and so on. And that's, I think, was the wish list of the facilitators as well, that in future, I think these things can play out very well. But at the moment, I think we still have that business case. So I think this kind of summarizes in of course, a few minutes that we allocated to this session in terms of what are the key takeaways from this conference. So I wanted to finish by asking everyone to just take a moment and give us your one word, like in your own way, what's your key takeaway for this session? Just one word or two words, but make sure that this one word you can just post in the chat so that we can see what is the key takeaway from your end. Okay? Insightful, smart, integration and innovation, joint efforts, timely, okay, sustainability and consortium management. Okay, innovation, collaboration, inclusion, farmer at the center, customer centricity, partnership. Oh, Zambia, okay. Government is key, insightful. Okay, awesome. Thank you so much. Do the hard thing. Wow, that's a nice one, resilience. Thank you so much for the feedback and sustainability from Christian there. Thank you for joining, and make subsidies smart. Thank you. Bundle products, that's Violet. Agriculture insurance scheme for securing futures. Thank you so much. And on that note, I would like to thank everyone that joined this seminar. I think Beth already alluded to that we really pick up these themes as with emerging trends. We saw already that we need to also begin to engage to have maybe another session roundtable for reinsurance companies. We know there's some reinsurance companies that have played a very significant role in terms of really pushing this frontier. So watch out for the next series of these seminars or webinars in terms of really trying to come together and share some insights And you'll see that at each point, we begin to look ahead to say, what can we do better? How can we exit? How can we, enhance what has been done already? So gratitude to everyone in terms of those who joined us. And once again, thank you to Access to Finance Rwanda, FinProbity Solutions, MunichRe Foundation, Microinsurance Network, FSD Zambia, and of course the TAG Microinsurance Association. So grateful again for being part of this event. And let me also advertise that we have the International Conference on Inclusive Insurance just around the corner. Please register and see you there. I'm so glad you joined. And like I said at the beginning, welcome back and you look fresh.
Yeah, thanks.
Okay.
Take care. Thanks. Talk to you soon. Bye-bye.
Okay. Bye-bye. Bye, everyone.